military men and women, their families, everyone who serves to keep us healthy and safe and free. We ask these things in Jesus' name. Amen.
Amen.
Director Campbell, will you lead us in the pledge?
Please join me in the pledge. I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Alrighty, welcome everyone to the April meeting of the Holly-Naval Water System Board of Directors. Appreciate you being here. I'd like to announce that we do have a quorum. We have all of our directors present. We have audio and video recorders in use. If you intend to speak, please fill out the member forum sign-up sheet to address the board and wait to be recognized. And when you are recognized to speak, please come to the podium and state your name and where you live. I'd like to approve our minutes and transcripts. We've got the March 21st regular meeting minutes and transcripts. Can I get a motion to approve those?
I'll make a motion.
Second. Motion, second. All right, any discussion on the minutes and transcripts?
Second.
Don.
Okay. Any discussion? All in favor say aye.
Aye.
Aye. Nays or abstentions? Motion carries. Approval of memberships. We have March new memberships 311, canceled memberships 273, and 0 transfers. Can I get a motion to approve our membership report?
A motion to approve.
I'll second.
Okay. Any discussion? All in favor say aye.
Aye.
All in nays or abstentions? Motion carries. Unfinished business. I'd like to welcome our special guest, Ms. Kristen Alexander with Moore & Averett. She's going to present our audited financial statements and recommendations. Kristen, would you like to do it from there, or would you like to go to the podium? Either way is fine.
Do you have a preference? Are you good?
You're okay, so
Okay.
We can hear you. I can hear you.
All right, very good. All right, well, thank you for having me here tonight. And you should have a copy of the audit and the management letter in your packet to review with you. Obviously, this year was very different. There was a lot of change. There was a lot of transition. This was a very different audit process for us as well. As I told you when we met in February, I did expect to encounter issues. There's normally issues when you have a significant and untimely change like there was with the CEO as well as with the Director of Finance shortly after. You saw that with the management letter comments and the findings we have. We'll talk about that in just a second. Overall, we did issue an unmodified opinion, which is the highest level of assurance we can provide. That does mean that the financial statements, in our opinion, are fairly stated in all material respects. We talked about that as well, what materiality means and how that applies to the financials. I will direct you to a couple of high points within the financials. Overall, your total assets for the system on a consolidated level ended at approximately $76 million. About 12.3 of that is within cash and investments. That's a consistent position for where you were at last year. And the remainder of your assets is obviously within your utility, plant, and equipment. Overall, your total liabilities are on page 4 of the financials. The biggest change within your financials this year related to a decrease in your pension benefit obligation. You made 2 key changes within your actuarial estimates that decreased your pension obligation. Those related to a change in your discount rate and then some of your mortality tables that you use, and it projects out the benefit obligation, as I said, and that decreased approximately $3.6 million overall. On page 5 is your income statement. Your revenues remained fairly consistent for the system. Water and sewer revenues increased slightly from $10.9 million to $11.3 million. And overall, there were some increases as well with the club's revenue for their green cart fees and the food sales as well. Overall, your expenses, your operating and maintenance expenses consolidated increased approximately $900,000. The bulk of that is within payroll increases. You also had some significant increases with a new landscaping contract and services and some information technology services as well. Within the financials, I'll direct you to 2 specific notes. Note 5, which is your long-term debt. It goes through all the various types of debt you have. You had 1 significant new bond issued last year, approximately the $19.5 million note that was out there. There was very minimal drawn on that last year. I know that there's still some discussions ongoing about that outstanding debt. And then note 6 is related to your pension plan, and that details all the details of your actuarial assumptions and how your pension flowed through the years in calculation and funded status. But with that, I will focus, I think, to the more important part of the presentation. This discussion this year is related to the management comments and the findings that we had. We did meet with management, I think it was last week or maybe the week before that, and we went through all of these findings in detail, discussed specific recommendations and areas that you can work on moving forward. If there is questions at any time, please stop me, so that if you have any questions, I want to make sure.
I don't have any questions, just mainly well, yeah, I guess it would be a question. You said that these financial statements are materially conform. But these are materially different than the financial statements that the board of directors were provided during 2022. So they're materially different than what we've been given before.
Correct. Yes.
That was it. I just want to make sure everybody understood that.
Yes, there were significant, which we'll talk about, that's one of our findings. There was 36 audit adjustments that were posted. That is very significant. That is very unusual for this water system. There is normally only a handful of adjustments that are made. And as long as I've worked with the water system, I've never seen that many journal entries or corrections that are necessary. And that is one of our direct findings related to the accounting year-end close process. It's something that with no director of finance, with no person of oversight, it's not something that I didn't expect coming into. You had no person in that role that was doing these year-end close, this year-end reconciliation, that knew how that process should flow. You've got someone sitting in that seat. We've had the conversation. She does know what should be happening. We went through every journal entry. We've talked about what needs to happen going forward. But yes, you are correct. There's significant material differences from what you were provided on your internal financial statements. So kind of going back to the start of the first page on the management letter, our first comment is related to purchasing policy approval. There were several significant purchases that the former CEO made that exceeded his purchasing authorization that we cannot verify that y'all ever approved. We've once again gone through that with management of the specific list. 2 of those specific items to point out were the new commercial, I think the Vector truck was one of those purchases, as well as several pieces of equipment leased for the golf course. Those were 2, like I said, significant ones, as well as there were contracts for landscaping services and IT, and those were specific ones we identified as well. The next one relates to the classification and recognition of expenses. This is something we've talked about a little bit through last year, but there was approximately $255,000 in costs related to the club that was not recorded within the club's individual accounting records. Those were recorded in the system's records. From an accounting standpoint, the individual books and records of each entity need to be complete and accurate. If the system chooses to pay for cost for the club, that can be handled through an intercompany exchange of funds, but the actual expenses need to be within the organization that incurred them. And so we did. We moved those costs.
Just whenever you get done with that.
We moved those costs in conjunction with management, and we went through a listing of those costs and moved those back to the club, and that's reflected as an intercompany payable and receivable between the system and the club. Go ahead.
Last year, I had a problem with us writing checks directly from Holland Bar Water System to pay the electricity bill, blah, blah, blah. Management said it was fine. Board of directors, board members that were in control said it was fine. And I kept pushing, and they said they wrote an email to your company, and that your company responded that it was perfectly fine to write the checks. And I don't really dispute that it's okay to write the checks. It's not illegal.
Right.
But is that something that you would, recommend as a best business practice to your other clients?
I would say once again, it's not on our concern the accounting wise of who's writing the check. It's that it's appropriately the expenses and the appropriate. And when we talked with management about it before, we did not realize that the expense wasn't there when they were paying it from Holly Navarre. Because Holly Navarre historically has paid for expenses for the club over the years. That's not unusual to us. but it's been reflected on the club's
It's
records.
it's been a cash transaction.
Correct.
Holland Bar Water System has given funds to the golf course. They've never written checks to pay, as far as I know.
Well, she just said they did. My question is, so
No,
is
she
it
did, but
corrected? She just said she did, but the question is, so have we corrected it now where there's a, from Holly Navarre Water to the club at Hidden Creek and vice versa, expenses being transacted, so it reflects on both books? That's really what you're saying, right? Do I
The
understand?
expenses shouldn't be on both books. The
Right.
expense should only be on one book.
Right.
On one side.
So,
Right.
so
But
we're,
just,
I'll wait my turn.
Bill, go ahead.
just to be clear, Holly Navarre Water System has always transferred money into the club at Hidden Creek. And the club at Hidden Creek uses those funds to pay its own bills. Holly Navarre Water System has never, to my knowledge, written a check to pay the actual bills of the club at Hidden Creek.
And I cannot confirm
You
or
can't
deny that. When I'm
confirm,
saying pay the
but
bills, I'm meaning through the
You mean
intercompany, so
through the
I will say I'm not,
intercompany loans.
yeah.
So, there you go.
I don't want that to say that they have written a check, but historically, they've either funded it through the Sprayfield expenses or income, or, like he said, transferred money and assisted the club in some way in paying those bills.
So that, what you're telling me then is that there's the bills to run the spray field, which is, that land was purchased as a spray field, and we have a golf course operation on that spray field. There is no way legally to pay, that Holly Navarre pays those spray field expenses. They all have to go against the club at Hidden Creek and then be reimbursed. That's the only way to do it?
As the current setup, because the Sprayfield is the club, and that's within that entity, as if it was any other entity when it was, or if it was a different entity and you were paying them for those costs, that they would own that. So as it's set up right now, yes.
So if we agree, if this board agrees then on what are valid Sprayfield expenses and what's a valid amount, then they should intercompany transfer that every month. I think you will find that the $255,000 or whatever that you found was all valid Sprayfield expenses.
No,
I know, based on this first thing about what the former CEO did, I wouldn't agree with that, Bill. I wouldn't say that they were all valid. Daryl's laughing because I'm agreeing with him.
Which ones?
I don't know. All I'm saying is, I'm not saying they're
Well,
all.
I'm saying of electricity, the ones that we motioned in the motion, the ones we were gonna pay.
That was after the rest of this.
All right.
My question then to the CEO really is, so you've already got this and you move forward to make sure that those line items are correct back and forth.
Absolutely.
Okay.
We're in that process. Barbara's been working with Kim, and they've been working on it the last couple of weeks.
The only thing they've done so far is make them liabilities on the club's books. Is that a correct statement?
That's correct.
Yes, you have not sent any money to the club.
No,
Okay,
no, sir.
that's the way I read the financials.
Our next comment is kind of what I briefed in the beginning, which is related to your accounting year-end close. And this was related to the significant amount of journal entries we made, reconciliations we worked through, and additional work for basically like I said, we assisted with a lot of the year-end close process and adjusting those books and records. The next comment is segregation of duties. This is also something that's not uncommon, especially when you have a change in that role of director of finance, controller, anyone, CFO at that level, because you've lost an element of management review right there. With that, you had bank reconciliations that weren't being reviewed. You had individuals at the club, or at Kim in this case, had access to post cash receipts, reconcile cash receipts, take deposits. And it really puts her in a vulnerable position of having access to all of those. When we've talked, a lot of those things have been remediated as we brought them up back in March when we were here. Very timely with that. As far as the bank reconciliations, I believe Barbara will be involved with reconciling and ensuring that those are reviewed as well. But there was a good portion of the year that was exposed without proper segregation of duties during that time. The next couple comments are not, I don't want to say as significant, but they really don't rise to the level of significance as the prior view did. These are more recommendations and evaluations for you going forward. We talked with management about standardized accounting procedures, possibly considering the uniform chart of accounts between the various entities, looking at standardizing purchasing policies, looking at gaining some efficiencies between the three entities. Once again, a recommendation for that. The next one involves charges of, or payments of sales tax on certain expenses. That was also a question that we looked into this year. We can't make a standpoint of legality of can you or can you not charge or pay sales tax on certain items. What we did do is evaluate, and we do agree it looks like everything is related to the spray field, and there's a determination that management made during the year that they were not going to pay sales tax on charges related to the spray field and any repairs that were being made or purchases for those types of expenses. But that's really needs to be taken up with the Department of Revenue and evaluated and actually getting an opinion on is that an appropriate stance. Because once again, that does put some exposure out to you. Journal entry documentation.
And just so the board knows that actually at the time, we had spoken with the Department of Revenue, but I think I'd like to go ahead and ask that we get a written. Kim Torres and I spoke in depth with the Department of Revenue, sent an email and got that as long as they're bona fide spray field expenses, I guess I was focused on irrigation, but it was anything primary. So after you and I had talked, Kristen, they did say it was, but I think we might need actually a formal written response from them that says, yes, these things are valid, that we don't have to pay sales tax on. And Jeff has that email and contact for that.
But wouldn't that be moot going forward?
Yeah, that's what I want to know.
No.
And I think we need to be truthful with them and tell them that these are expenses that would be incurred just because it's a golf course. And not tell them that, hey, yeah, all the sprinklers on the golf course, that's only 100% related to a spray field. Because I think that's for all.
So the stuff with the pumps? I don't
Yeah,
get it.
yeah,
If we want-
exactly.
if we
Everything
want to-
that's on that golf course needs to be.
If we
a
want
part
to
of
pay
the golf
sales
course.
tax and not save members money on spray field expenses,
I've been talking to you about this since November.
and I've got the
And you
legal
told me
opinion,
back
and
then
I'm
that you
asking.
actually got a written response from the Department of Revenue. But I guess that's not true either.
I never took. Are we gonna go down that road again?
Nope, we're gonna let her
Okay.
finish.
Thanks for your apology, by the way.
It wasn't known.
Our next comment related to journal entry documentation. There were journal entries posted that didn't have appropriate documentation. That also goes back to the segregation of duties. There were journal entries that were posted that weren't reviewed or approved. We've added that. And then finally, Municipal Messy has accumulated a large cash balance, and they're in one bank and one bank account. They do have a significant uninsured that does put them at risk. Given the nature of the banks at the moment and some concerns, I just wanted to bring that to your attention. I know the system utilizes sweeps, and you have a different level of insurance, and you may want to look at that with municipal as well. Otherwise,
Listen, could we go back to the standard accounting procedures? Because now, we didn't have anything written that they were going by, and we tried to start a written procedure. So Jeff, are you gonna implement that?
Absolutely. I've already directed Barbara to start looking at that. We
I was
talked
gonna say,
about.
because I was gonna
getting
say,
those in
can we have
place.
something written by end of July,
Oh,
90 days of a corporate procedural manual that covers this things, that, so it's, when person A leaves, person B doesn't have to pick it up from, because
Yeah, let me identify exactly what documents we're talking about and get a timeline for those documents. We can provide that in the next meeting for sure, or sooner.
In regards to the uninsured cash balances, have we taken some action on Messy's money getting moved into either separate accounts or a sweep account?
We've talked about this previously. Right now, we're in the process of Clinton, we're looking at a major piece of equipment to purchase, which would reduce that balance mark. And what we've kind of been thinking about is having a separate account at a separate institution that would be more on the savings side, or like more of an investment account to protect us. But I think 2 accounts would cover us at that point in time. But that's just the thinking right now. We're waiting for Clinton and Mark to come back with their proposal on the equipment.
At some point, would it make sense to rotate some money through CDs at different institutions?
Yes, any way we could either separate the accounts so that the cumulative insurance would cover us, or to place some of the money in some instrument that would be separately protected, insured, or standalone as an asset, so.
Sounds like y'all are on it.
We're gonna do something, and I think Clinton and Mark are close to, coming up with what brand or type, scope of equipment.
What are you buying? What are you trying to buy?
A camera truck. A camera truck.
Camera
is-
truck.
Yeah, it's
Like
not
camera.
secret or anything.
It's a truck and an ATV
We,
and all the bells and whistles.
Yeah.
Is that something you can go hunting with?
when we bought the camera that Holly Navarre has,
Yeah.
that was kind of an experimental thing for a utility back then to have something like that.
Okay.
But that thing is huge. It's a great benefit, but we went inexpensive the last time we did it because that's what the money we had to spend, and we mounted that in a trailer. It's not very functional that way. And originally the thought was that municipal would also use that piece of equipment. We would use it more for probably stormwater services for our clients. So we really need something that is more, I was gonna say professionally, but more usefully mounted into a vehicle to, put it out there and recover it.
Oh, no, they're great.
And then they're also looking at, the trailer's great for mobility, but it's not great for getting in the places you would think you could get into that. So they're looking at a separate setup that would be side-by-side mounted, so like the easements in Woodmont that we cleared, and those type of areas, the side-by-side would have access to those areas and they could use it. And of course, it would be something that would be beneficial to both of us. So,
Exactly.
Otherwise, any further questions?
Yes, I have a couple of questions.
Yes, sir.
I forget where, I didn't write down where it was, but you mentioned in someplace in the audit that golf carts are considered property of the club, but they are a leased item. Like the maintenance equipment is, but it's not considered property, it's not adjusted as property, so I was wondering what the difference is.
Correct. Both of those are actually considered assets. They're considered right-to-use assets because you have them for a certain period of time.
Yeah.
So they are assets they may not be your owned assets, but you still have an intangible right to them. So there is a value.
I was just confused why you didn't list the maintenance equipment as assets, I didn't see that in there. And the other question I have is, on page 18, you say that the system does not plan to contribute anything in 2023 to the pension plan, yet there's $375,000 in the budget.
Correct. Per the actuary, you're not required to. So this is what was directly from the actuary report, which we can
That
modify.
ain't what it says, though, it says the system does not plan to contribute.
That's, like I said, we can modify it to what the budget needs to say. It's just per the actuary, that's what they've intended. I have no problem adjusting that.
Yeah, I don't think that takes into account the 2 retirees this year that we have to pay.
Okay.
So I think that's the difference.
And the other question, the final question I have, Kristen, is, did you find, I know you found, you've mentioned all the inconsistencies in the way we were accounting for things and stuff. Did you find any indication of fraud or criminal activity that went on this past year in any of the numbers?
Obviously, that's not something I can give complete assurance on, but there's
I'm
nothing.
not telling like the one stuff you looked at, did you see any indication of fraud or criminal?
I don't think that's their job.
Yeah,
I think,
that is not under our scope.
But
More
if you
than-
found that, you would mention it.
If we found anything, we would bring that to your attention, yes.
Okay, so you did not find anything.
Correct, there's nothing within that I've looked at that I have found from that, yes. There's a lot of, the journal entries are very typical of, like I said, not having a director reviewing your stuff before the accounting close. It's that, all of that was very consistent with really what we expected. Kim and Rebecca had both reached out to us several times and, asked questions. So like I said, that all came within our expectations.
I would think that the previous CEO, knowing he had a $25,000 limit and he's signing off on $500,000 equipment and, there's plenty of room in there. Fraud could happen, so, I'm sure that we continue with this,
That comes later on the agenda.
right, yeah.
Got one more question. So the $500,000 lease of equipment, perfectly clear, that is a debt of the
solution out there, yes.
Taking it here.
Any other questions for
Yes.
Kristen?
So a couple, or at least one. See, part of this was mentioned, the turnover was causing some of this, and you expected some of it. So we've had turnover or perturbations for a while. So all these appeared this year, nothing appeared like a year ago this time?
Correct. There were issues last year. There were journal entries we worked through with Ty, not to this level, but a lot of those were communicated directly with him, directly with Dallas, directly with how we were working with him going forward, but nothing to this level. No, this is the culmination of really the last year of lack of reconciliations and lack of review.
Okay.
But yes, I will say there were conversations with Ty and Dallas last year, but nothing to a level of significance that required further, a management letter or further findings or, like I said, this communication.
And those communications didn't reappear this year? Whatever corrections were discussed or implemented, you didn't witness them again this year. These are all new?
Yes, this is
Okay.
all, like I said, this was all within the last year.
Okay.
I make a motion to approve the audited financial statements for 2023 as presented.
Can we add to that staff's recommendations to implement the recommendations in the letter to management? We have an amended motion. Do we have a second?
A second.
All right, what other discussion do we have? My discussion is I want to focus on the positive, and going forward, we're going to, make some corrections on these, but this was probably one of the most concerning audits I think we've had in the history that I'm aware of. And so, we definitely need to make some changes, and I think we've got the folks in place to do that now. So that's the only discussion I have. I'd like to just focus on keeping it positive moving forward. All right, any other discussion?
I was just gonna ask.
Yes.
Your comments in here were former CEO, not interim CEO, correct?
Correct.
Okay. I just
I
want
had in parentheses, not
all right.
not the other row.
Other discussion?
I have more discussion, but I don't want to take up Ms. Kirsten's time. So I have more discussion on this issue for the board of directors, not the CPA.
Okay. All right, well, I'll call the vote on the motion then. All in favor say aye.
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 Nays or abstentions? Motion carries. All right, thank you for coming. You're welcome to stay and enjoy our meeting, but you're also welcome.
On that note,
I'll see y'all in a year.
Less than a year.
Maybe not.
Yeah.
We're gonna put that out for bids.
Yeah.
Could I ask you one more question?
of course you can, yeah.
Back on that lease, I'm sorry, but was there anything that happened to the accounting standards in 2022 that made that lease debt, whereas in 2021 you wouldn't have been debt?
There was a change in the lease standards, but that still would have been,
It still would have been a capital lease.
yes, it still would have been capital lease.
and
It still would have been
debt.
classified as debt,
I
yes.
forgot about that because that was one of the arguments last year was that the accounting standards changed on January 1, so now it's going to be a capital asset and debt, but it wasn't whenever we took it out, so.
Correct. I did not go into that because there was so many other points with the audit.
I
but
understand,
like
I just
said,
needed that as part of my background.
I did go through that with
Thank you.
in more detail. All right, thank you. If you have any other questions at any point in time, I know management is here. I'm also an email away if there's anything else that comes up. I appreciate your cooperation and your time this year.
Thank you.
Thanks,
Thank you.
Kristen.
Thanks, Kristen.
Mr. President,
Yes,
I just want to say that around May of last year, James Dabney sent me a text with a post from Facebook. Look at this equipment that they bought. We're looking at $500,000 worth of equipment. Never come before this board of directors. I asked about it at board meeting. I even gave the accounting standards to the board of directors and management. and I was summarily dismissed is not knowing what I was talking about. But after tonight, I think I've been proven correct. One of the big things last year that was so concerning was that $500,000. I know we said, somebody made it a point to say that it was our previous CEO, but it wasn't. It was our previous CEO and 2 board members, probably 3 actually, because the same 3 attended every meeting last year. And those 2 board members had control over that meeting because they were 66% of it. And they could have at any time said that this is a violation of our operating agreement, and they didn't. And they hid it from this board. I don't think that any one of us or any 2 of us should have the ability to spend our water systems members' money without any input of the rest of the board. I think it's wrong. And I think tonight we've proven that it's wrong. You've got $750,000, at least, that we know that was handled incorrectly last year out there at the golf course. And there's 3 board members the entire year that were out there. They made it that way. We had 2 members that were managers, and we had 1 member that was the president that made it a point that he had to be at every one of those meetings. So those 3 board members, as well as our previous CEO, were the only people that had any control over that golf course last year. It's wrong. It's a violation of the operating agreement. Last year, the board members told the public consistently every month that the golf course was profitable. But tonight we find out that it actually lost $125,000. But nobody will mention that to the public. I think we need to change the way we operate the club. So in light of all of that and what our CPA has told us tonight, I think we need to amend our operating or management agreement to the club so that the only manager of the club is the chief executive officer of Holly Navarre Water System. And this board of directors controls that golf course, just as it always has in the past, through the CEO. So I make the motion.
I'll second it for discussion.
It's not on the agenda.
I don't care.
Well,
It's got a second. And you're one of the ones that was
so you're
fraudulent.
claiming back when this board here managed the golf course and the manager managed, those were correct? That stuff didn't go wrong, that they didn't make
We
things?
didn't have $750,000 worth of misappropriation of funds.
Well, you say that, but the lease was up and you had to replace it. Now,
You still-
now, was it happen correctly? No, I'm agree to you, you're right, it did not. But it was a necessary piece of equipment. Did it happen? No, I'm not.
So
But
do the
an
three-
LLC has to have a board of managers. Okay,
Then the board of managers should be the CEO of Holly Navarre Water System. Each one of us should have the exact same amount of input into that golf course as any of the rest of us do. We certainly shouldn't have board members who have a duality or a conflict of interest. And when 25% of the value of your home is tied to the continued operations of that golf course, and you're making financial decisions for that golf course with other people's money, I don't think you should be a manager of that entity. We were elected as board members for this water system, not that golf course.
So we're gonna make the same kind of change to the Messy board. Messy should only report to the CEO.
I think that would be appropriate.
Mark, what say you? Is this a motion for
Well-
discussion and to be voted or not, or we move forward?
In response to the comment that it's not on the agenda, there were some recommendations in the audit of doing some things a different way, and I think Director Lynchard is trying to make a suggestion of a way that we can do this that might not put us in this position in the future, and that we have more whole board oversight rather than just part of the board, if I'm understanding you correctly.
Yes, exactly.
So
And it's-
I wouldn't agree with the assessment, it doesn't keep us, that it keeps us from ever having that problem again. I mean, I wasn't sitting on this board when it happened, but my understanding that OA was put into place because the prior CEO was, for lack of a better phrase, screwing up. So, no offense,
What was, no, wait, say that again. What were you talking about? You mean the management agreement? Or O&M?
Yeah. the management agreement, yeah. That it was put in place and two managers were put on the board. I didn't think they were on the golf course board until
100,
right before I came on.
now, I was not involved whenever the management agreement was finalized. I was involved whenever it was initially discussed, but it had absolutely nothing to do with how it was managed in the past. It was us trying, it was the board of directors was interested in marketing and selling the golf course at that time. And whenever we whenever we had, the attorneys draw up the proposal for the sale of that golf course, they said, hey, where's your operating agreement? And we didn't have one to provide to them, and they said, well, this is a problem, you have to have an operating agreement. But it had nothing to do with mismanagement or how it was being
I
operated.
didn't use the word mismanagement, and I don't, that is not my recollection of what happened. I don't know if it's germane, but my understanding, my memory is that the board, two separate members of the board got more involved because of what the CEO was doing. It wasn't running smooth, good, bad, or indifferent. I'm just saying, having a CEO in charge is not a get out of jail card for free. We have to manage still.
We still have to manage, I agree with that, but you have to agree that whenever you have people with a conflict of interest that have complete control, and no oversight whatsoever, that is a problem. We weren't even, today, it just popped up onto my messages, and I like to see it because I think everybody should have a copy of it, and it's the minutes to the meeting, of our golf course from last week. And I always like to see that because it reminds me that last year, we never got a single copy of it. We never saw a single one. It wasn't until this year, whenever I got on the board and I said, hey, I'd like to see these, that I actually got a copy of them. Now, miraculously, we get them every week. But last year, as I say, you guys had no oversight.
Well, we had the press to see the financials in the budget too.
And the bank statements and registers, which staff has told me weren't even right. Yet we were provided with them and told that they were good.
The initial operating agreement that was drafted included provision that only one director was going to be on that board, and we pressed to have two directors on that board because we were concerned that just having the CEO and a club manager on the board would give the CEO and the club manager more control of the golf course than having two directors on there. So I'm just pointing that out, that we pressed to have two board members on there as opposed to the CEO and the golf course manager.
I wasn't here whenever y'all did that. I wasn't on the board at that time. But had I been on the board, I would have pressed for no board members on there. You have as much, we actually have more control over the CEO than we have over our board members. You know, I don't have the ability to fire the three board members that did the lease last year. I don't have the ability to hold them accountable at all. The only person that can do that is our members. So I say that we have a lot more control over our staff than we have over board members.
Other discussion?
That's the way it's set up.
Because
that's the way-
people
that's the
that
way all
own,
boards are.
because board members who own homes on the golf course decided to set it up that way.
That's not true.
That's not true.
That's not true.
You don't
Our
own a home on
legal
the golf
counsel,
course?
no, that's not true.
Do you,
You
Mike?
can say what you, but
I'm asking
that's
you a
not
question,
true.
Joe, do you live on, do you have a home on the golf course?
I have a home on the golf course, I
Bill,
have
do
a
you have a
vested
home on the
interest,
golf
hang on,
course?
now let me
Bill,
ask
do you
a
have a
question.
home on the golf course?
Yes,
Where are
but
we
that
going?
does not mean I
Did
have a
Mike,
conflict
did
of
Mike
interest.
live on the, Mike have a home on the golf course?
No.
He didn't?
What?
No, not you, Mike Kennedy. Mike Kennedy, did he have a home on the golf?
Mike Kennedy was never on that three-member board.
Mike Kennedy was on the board.
But Daryl, let's go down there, right?
Let's go down that
I have
road.
a vested interest.
Joe has.
But time and time again,
You want me to be able to take
Oh,
that
I'm
sorry.
down, would you mind?
Let Joe have the floor.
but time and time again, I have started, I just want to pay spray field costs. The golf course should be done as, Daryl, let's go to the transcripts. You can make all those you want.
Well, just, I know we're changing the theories now that the accountant's gone, but we have a motion on the table.
The whole reason part of that board of managers was because of the lack of oversight the last time, and you look at the last three managers, and oh, by the way, yes, the manager was convicted of theft. This board had no oversight. I sat out there and watched the figures that came up and what was happening. So that's part of the reason, other than an LLC should have a board of
You
managers. So-
misappropriated $750,000
Didn't
last year.
misappropriate, Daryl. You can say that all you want. You didn't.
$255,000 that we're
Joe
showing as a
Campbell was
debt now at
not,
the
Joe
golf
Campbell
course.
had nothing to do with that.
Joe
Okay,
Campbell
I'd
had
say all
Joe
you want.
Campbell
like
was the
to-
acting CEO.
Let's talk one at a time, first of all, and not have back and forth. Give each other respect as you're, even if you disagree, you have to be
He
respectful.
doesn't have respect.
I'd like to hear what our attorney's opinion is as far as changing the operating agreement, what that would involve and the time frame, and can you give us your, not opinion of whether you're in favor of it or not, but just what would be involved in changing that?
Sure. I mean, the operating agreement can be modified. You control it, so you just direct what changes you want, and it'll be incorporated.
We've had an attorney opinion before. Well, is it not true that the fact that one of the board of directors owns a home on a golf course does not make them a conflict of interest with being on the management board of the club?
There has been no issue with regards to that in the past. I mean, you were a member of this board elected, and this board elected you to serve in that capacity. So that's how you got there. You didn't, when you were appointed by this board, or you, members of the managers of the LLC were appointed by this board. This board can take action, change that.
You're not making a determination whether someone is conflicted or not. You're just saying that wasn't a requirement, correct?
Right, I'm saying there's no violation of any conflict policy that this company has, this board is set with regards to members and where they live and where they serve. There's been no such determination or policy in place.
We don't have a policy that prohibits board members to have a conflict of interest. I'm saying we need one.
We can draft what, to the president's question, we can modify the agreement, we can draft policy, and we can present it to the board for approval.
The motion on the floor is to modify the agreement. The current situation is that Director Lynchard and Director Matthews are on that board, and they don't live on the golf course, therefore wouldn't have any potential conflict of interest. So, I think we're in a current situation where, I think things are going to have some changes if we don't modify that agreement. So my question is it better to have three members making decisions for the golf course, three people making decisions for the golf course, or just the CEO? And that's where I'm.
And I'll go down that, if I may, go down that route, because following Daryl's thinking, if just the CEO, that still would have happened. That would not have prevented this board not getting approval for that lease for $255. But based on the CEO being involved, right? That's what you're saying.
Yeah.
So what you're proposing isn't gonna necessarily delineate that. I agree with you, he overstepped his bounds.
Okay, but I'm gonna go a little further down the road with you, okay? Had we had staff, I'll use that. And we had accounting staff in place at the time. That whenever I asked the question, if that lease was debt, if they didn't argue with me and you guys didn't believe it, and he answered correctly that it was debt, then we would have had the discussion as to whether or not the CEO violated the operating agreement and acted outside of his authority, and that we should terminate his employment. So we would have had oversight at that point.
The discussion was not the case of how much it cost us a month, and he didn't pass the $25,000. You're sure that wasn't it?
That would have been part of it. We would have at that point as well.
think
But the
that-
$500,000 worth of debt would have been more important to me.
Yeah, the discussion that we had at that time was, and their justification for it was that it was a lease, it was not a purchase, it was not an expense, so it was a monthly obligation, not a, and we pretty much shot that down, I think, that the total value of that was above the spending limit. So, not trying to go back and rehash it, but that's, that was the justification from the prior CEO that he had the ability to do that.
But we've learned tonight that that justification was not correct.
I agree.
The professional told me.
Mr. President, with regards to your operating agreement, and I have a copy of it in front of me, and this is the operating agreement that was signed by the then president of this board as the member, and it's the one that, just so everybody is clear, the minutes are clear, it was effective of April 2021. The management, and if I could just read this, the management, the company shall be managed by one or more managers who may or may not be members of the company. If at any time the company has more than one manager, then it is a board of managers, and actions have to be taken with regards to the majority. This board has appointed 3 managers for the club. The operating agreement does not require 3 managers. This board appointed 3 managers. The operating agreement is fine to be run by 1 manager or 7 managers or any number of managers. If there's more than 1 manager appointed, then they become a board and they can only act with the approval, authority of the majority. So it would be negligent to have an even number. So it'd be dumb and negligent to have 2 or 4 board members, because you could have a 2-2 and you couldn't get things done. But you could appoint 1, 3, 5, 7, 9, however many you want, and this operating agreement would not have to be modified. So the action, if the action is to change the number of managers, that's a different thing. That you have appointed those managers. If you need to change this structure, then we can do so by amending the operating. But I'm hearing, I just want to be clear, that if the idea is you just want 1 person to manage it, then
We could forego
you could
modifying the
revoke
agreement.
the appointment of the other 2, whatever. The operating agreement would still be whole.
Darryl, would you be amenable to going that route and just naming 1 manager instead of a board of managers? Or do you want to stick with the
Actually,
operating
I'm
agreement
good.
being changed?
Can we withdraw that motion? Since that motion actually seems a little, it doesn't seem valid at this point. We could only have 1 or 7 or 9 or 8.
You made the motion, you can
So
withdraw
I
it.
would like to withdraw that motion and replace it with another. I make a motion that the management agreement at the club at Hidden Creek be modified, and under the description of managers, we either have 1 manager who will be the CEO or the chief executive hauling of our water system, or it will be managed by the entire board hauling of our water system. And those are the only 2 ways, not a 1 or more.
We have a motion.
Second?
Any second?
So I won't this time, because I like the idea of leaving as is and the two boards that are off, so we don't have, whatever happens in the next couple of years, and something's gonna happen between the golf course and the water system. Just don't wanna have to make changes we don't have to make, and still get to the spot we wanna be where there's only one manager and the entire board is over him or her. And I don't think we need to redo the OA based on what Will said, so that's why I'm not seconding this time.
Would anyone like to make that motion that we appoint one manager instead of having three?
So I will make that motion.
I'll
Well,
second it.
I don't know that that's the right, correct me if I'm wrong, I think the motion needs to be, we want to remove Daryl and Mike from
Yes.
the board of managers.
Right.
Yes.
So I would
That's-
make that motion if that's the correct motion.
That is a motion?
I'm trying to.
Yes, I'll make
Do we
that
have a
motion.
second?
I'll second it for discussion.
Okay, we're in discussion.
I would,
So I have a quick question.
go ahead.
I'm sorry, Daryl. No matter how many people have oversight of the golf course, anything over $25,000 still has to come to us, the Holly Navarre Water System Board, to be approved, correct?
That's the way the operating.
That's the way the agreement's written.
And we made that motion to post that.
Okay.
Unbudgeted.
I would like to say that it is, did we ever have, I don't know that we've ever made a determination, tonight's just as good as any to make a determination, but, you said that anything over $25,000 or any expenditure over $25,000 has to come before the board.
And that's-
for approval.
And
That being said,
Unbudgeted
if
capital.
every month we write a check for the mortgage, which is $160,000, and we don't get that approved every month, we approve the budget, and that's part of the budget, so.
I think the way
I
it's
think the
worded,
It says it's
$25,000
budgeted.
is
Any unbudgeted.
Unbudgeted.
any unbudgeted items.
Yeah, the provision is subparagraph J, to approve any unbudgeted, single expenditure greater than $25,000. Under paragraph 8.3.
That answers your question, David?
Yes, thank you.
Other discussion? Are we ready to call the vote?
I still have a point of order, it's not on the budget, I'd like to table till next so we can get our head around, and there may be a right way to say we need to rewrite it that says, that addresses some of Daryl's concern that if it's just the CEO, he can't do X, Y, and Z. So instead of it saying 25,000 budgeted, it actually specifies by month, by year, by date, but you're the president, if you call the vote, you call the vote.
I'm going to allow the vote because, you know, it is in relation to some of our concerns with the audit, so I'm going to allow it. So the motion was to remove Daryl and Mike from the Hidden Creek Management Operating Board, or Board of Managers, whatever term you want to use. And we had that seconded. Any further discussion?
Just, let me talk about this for just a second. So if we're going to remove us, I'm good with that, but let's go ahead and add on to that we're not gonna replace us with anybody before the end of the year.
Have we take another
I'm
motion?
going to modify my motion to say that.
Okay.
This board, now, future boards can do whatever they
Future
want.
boards can do whatever they want to,
Right.
but this board is tonight and this year, so I'll agree with with that.
And the whole purpose of removing you and Mike,
It's because I don't wanna be on that board, not because I don't enjoy that board. I don't think that I am so much better than you that I should be able to make financial decisions for the golf course. I think that me and you together should make those decisions. So I'm not saying that it's bad that I'm out there, I'm saying it's bad that anybody to be out there
From our board.
from our board.
Now, in the minutes in our conversation at the golf course, we were talking about having maybe
Yeah.
like a community
Yeah.
kind of
And
committee
that's what I
attached
think
to.
And I think that's what some board members could do, is have you know, some kind of golf course committee, that has nothing to do with the operations of the golf course, but that can work with the community to come up with ideas to improve the play out there.
But still, even
Isn't that
with
what
you
we
and
pay
Mike
the
on the
PGA
board,
Pro to do?
Huh?
Isn't that what we pay the PGA Pro to do, to think of how to improve things and make money for us and
But
take?
don't.
I'm sure he gets
don't
an
the
earful
members
of
want a little bit of
suggestions
input?
on a daily basis.
Always want
Yeah.
Yeah, that's what.
all members want it.
I still don't understand what decisions that would be made would be better without the two board members on the golf.
You have to, I mean, for me. I
Because they
look at-
still have to come before the full board to be approved any unbudgeted item over 25,000. So taking two people off the board and having it just one manager, I just don't understand what's gonna.
Here's the thing, okay, last year, what you're saying is correct, if it's done properly.
Right.
But last year, that board never did inquire as to us.
Right,
So.
but again, they went against
Yeah,
the.
exactly, they did.
the rules.
And what's happening right now, and what we're doing, in 1 year, we could be right back in that boat again. We could have a CEO and some board members that control this place, they do whatever they want to with that golf course, and nobody'd be able to do a single thing about it. So it'd be nice if we could fix that going forward, make it to where that doesn't
So the
happen
whole problem is accountability.
Yes.
That's the whole problem.
Because
It's not
we've
how many
got-
people are on the board, it's how can we hold the golf course board accountable for what they're doing and what they have done.
And if it's
And
just
that was
the
gonna be one of
CEO,
my
the
questions.
CEO is accountable.
Yeah, that $450,000 that never came before the full board, you know, what kind of repercussions did they?
That could still happen, but the CEO would be accountable and the two board members,
And the-
there's no
the-
accountability for board members.
And the $255,000 that came out of the Holly Navarre Water System checking account to pay for bills at the golf course that was never approved here.
Right.
All right, any other discussion on that motion? I'd like to go ahead and call the vote.
Can you repeat what the motion is now, please?
He's just removed it off and not replaced it.
My understanding of the motion that was made by Don and seconded by Bill was that you are removing the two board members as managers of the club at Hidden Creek. That's the motion. The effect of that motion will be that you will have one manager who is currently your CEO running as the manager, sole manager of the club at Hidden Creek, and the operating agreement is in place, and he will have that authority and control as granted by the operating.
And there was one amendment to that motion that this board will not add other managers for the rest of this year. But we have the motion and a second. It was restated. All in favor,
Hang on,
say
hang
aye.
on, who made the motion? Don made the motion?
Don made the motion.
And who seconded?
I did.
And that also that amendment, did you
The
second
year.
the amendment?
Sure.
Okay. All in favor, say aye.
Aye.
Aye. Nays or abstentions? Motion carries.
I'll make your life a little easier. Yeah.
Will
Not
it?
so many meetings, yeah. One less meeting every month.
Please state your name for the
Kurt
record.
Cosby, Holly by the Sea. You guys gonna do the same thing for Messi? I recommend you do.
Let me speak and then I'll advise what I'm supposed to do. You can't do that, Messi. Messi is a different corporation, type of corporation than the Club at Hidden Creek. Messi is a professional organization that requires one of two people that work for Messi right now to be on that board of directors. Since that requirement is there, I would suggest that you definitely want your CEO on the board of directors, and because that would make a tie vote between me and your CEO, you want a third board of directors, which would be a board of directors, David Crumbly. I advise you that regardless of what I just said right there, that before you do anything, that we have to report tomorrow, that you ask that attorney before you do anything. Please, please.
I agree with Phil. I think having one of our board of directors on that board is beneficial. It is a totally different operation than the golf course. It's an engineering firm, and it needs to be handled a little bit differently than a golf course does.
Only needs to be handled differently if that's what its charter or corporation paper state. Is that what it states, that there will be at least one director from?
No, it does not say that, I don't believe. It doesn't even limit the number of directors that serve on that board. Every single one of you can serve on that board. The bylaws and the articles say nothing about the state law that requires that license to be attached to a professional engineer, which would be me or Dale at this point in time. So, that's the only requirement. Just please don't do anything I've got to report tomorrow.
And
Screw something up.
I think I missed what happens tomorrow.
I just don't want you to do anything tonight that.
let's table that discussion. If it comes up in a future meeting, we can add it to the agenda, but I don't think the audit concerns were of such a level with Messy that warrants talking about it tonight.
We welcome everyone to be on the board of directors, and that's the only one. That doesn't bother us one bit. I'm only saying, don't mess us up with state law right now, so.
Okay, so let's keep the meeting moving forward. Our next item on the agenda is the employee handbook. We have been presented a final version for approval. I saw some comments from Director Thiel through email that I thought were very astute comments and good suggestions. We're looking for a motion to approve it with discussion. If there are any other further changes, we can do that during the discussion phase. So I'd like to get a motion to approve the final version of the employee handbook.
I motion to approve with discussion.
I'll second it for discussion.
Okay, we're in discussion.
I guess the big thing for me, and I think Director Thiel hit it on the nose, I think having twice annual, reports on their performance, I think is a little extensive. I think, did you guys decide to take it down to at least minimum of one?
That's what we're currently doing, right? Yeah, there's currently 2. Don't believe that changed. It's only the one would be tied to any financial impact. The mid-year is really a mid-year, just so that you don't get that feedback at the end of the year and so much time has passed. So it's really more just to stay in touch with the employee.
Okay. I've worked for companies that do it twice a year too, so it's, I don't think that's excessive. My opinion on that is,
But there's no reason that the supervisors can't do verbal, how's it going, semi-annually
They
or
can talk
whatever,
to
that
them,
can be
yeah.
put in there. I just think that a formal written one twice a year, you tie up too much of your folks doing administrivia. I've never been in an organization that required more than one formal written one a year.
And I've been a manager, and it does take quite a bit of time to do those reviews. And I think to do them twice would be fine, I think, but to make sure that in the handbook, just to say minimum of one, that way it would clear the.
Right.
It would open it up and make it a little more flexible for them. That was my thought.
I'm not opposed to that. It is a lot of administrative work.
It takes a lot of time.
It is. It's a lot of reviews to do.
so the amendment would be a minimum of one performance review per year.
One formal written performance review per year.
Minimum, right? So you could
Minimum.
still do
They could do two if they needed to.
Yeah.
And that's up to the CEO. If he thinks that people need to do 2, they can do 2.
Usually you use that when you're trying to get somebody out, right? I mean, then you can show.
Not
that they-
necessarily.
You can't do it that way. If you do it for one, you do it for all.
Well, and you can write up an employee anytime, so
Yes.
the performance review is basically just to reset some expectations, and I like the language of a minimum of one. That way it requires one a year, but it's up to the CEO and managers if they want to do more than that. All right, other discussion?
I still have a question. I had it in my notes and I didn't see it in the final version on the applicability. I just want to confirm in my own mind, does this apply to Howling Our Water System and both subsidiaries? So all the things in here apply to both, all 3 entities?
It should, right? Yeah.
That's,
And where does it say that?
it doesn't say that.
I guess that's my point. though.
Well,
I'm seeing
I
heads
can't
nod
speak
yes.
for
I
the
just
golf
have some-
course, but for Messi, we have an administrative agreement with this board that says, amongst other things, that we agree to comply with the purchasing policy and the personnel policy, unless in that agreement it says there's something different, which I can't even think of. Which one is a contract? Yeah, I can't even think of anything that's necessarily different. So, yeah.
But you
It
have,
doesn't, I don't think it says it in there because I read it, but it does in our operating agreement. So I don't know about the golf course.
okay, well, I'm ambivalent. If you wanted to apply to them all, that's fine. It's just that you have to look at your operating agreements and to make sure there's no conflicts in there.
We have already read through that bill, and I.
There's one I know concerning bonuses. It's a conflict.
Well, bonuses for Messi are covered within our operating agreement.
Yes, but if this thing applies, bonuses are not in here. That's decided by on the board of director level.
Well,
So that's what I'm
currently,
saying.
what our administrative agreement says is we comply with that, but because bonuses are addressed differently in our operating agreement, that would supersede that document right there.
Yeah. Okay, I don't think that's, I don't think that's legal for you as a subsidiary to supersede something that's from the primary. And I'm not saying that anything has to be changed, I'm just saying we should have to be careful that everything lines up.
I think that, just to be clear, the managers of Messi or Phil and the prior CEO, they had absolutely nothing to do with the approval of that document. This board approved that document. The board made that decision. I think that we could obviously modify it if it needed modifying, but I don't see that it does. I would like Will or Mr. Dunaway to let us know, is it legal for us to have a separate agreement that supersedes the employee handbook?
It's legal to do so. I'm looking at we refer to this in different ways, but I think the way it's titled is Messi's administrative policy.
Correct.
Because there's not an operating.
Okay.
Correct, that is correct.
So
We're not an LLC, so.
Yeah, whatever that
Talking about
document
Use that term.
is the administrative policies, which was signed by Darrell Lynchard as president of this board on 8 October of 2020. And there was one amendment made by and signed by Mark Miller on March 15 of 2023 with regards to adding that Messi shall submit annually a proposed budget, which shall be approved by the Holly Navarre board no later than at its December meeting. So, you asked the question, what is it that we're looking to find out? Does this conflict with the employment manual?
That does indeed conflict with the employment manual. And board member, or one of our board members is wondering whether it's legal or not to have a document that supersedes our employee handbook.
In my opinion, we shouldn't have inconsistent policies with regards to employees. So it just makes it more complicated. Now, I'm hearing you say that it conflicts. I don't know. If somebody can tell me if it conflicts.
The difference being the handbook says this board will establish bonuses. With Messi, they do their own based on performance of the company.
That's correct. So for instance, the Holly Navarre personnel policy at the time Messi was formed had no provision for bonuses in it.
Right.
Ours does.
Okay,
a
I understand.
specific provision.
So the question, this board approved this administrative policy, and this board is approving, if you do, this employee handbook. You can do both, and then now the question is, which approve? In my opinion, if you're gonna approve a document that's gonna be inconsistent, you probably ought to reaffirm this document, or at least make the note that for Messi, it's gonna follow this, which is what this says. That's what I would say here. If you've got something that you're fixing to approve that's gonna be inconsistent, then I would just note that as to the inconsistencies, Messi's administrative policy controls.
So a little asterisk at the bottom, so it doesn't apply to messy employees.
As to the
As-
inconsistent.
As to only the inconsistencies,
Right,
because I think the only difference between that policy right there and either my employment contract, which is even a separate document, which has things in it, and that document right there is just the fact that we're entitled to earn a bonus on the profit from the portion of Messy that's earned from third parties. I think that's the only difference.
As long as we make some kind of a note. in
I'm
there.
fine with all that, as long as we're being consistent. I just want to make sure that we're not making conflicting approvals.
I mean, and there's a good reason for that conflict, right? So,
Well, Jared could certainly look at it, and regardless of the motion that's made and passed, Jared could certainly look at it and confirm that that is the only difference between the two. I can't remember any other difference between the two. Our vacation is the same. Our health insurance, we receive no benefits, separate benefits. Our hiring, our firing, there's no. Now, there might be, in mine and Dale's employment contract, there may be some specific requirements upon Dale and I that don't appear in that document right there related to the operation of that for-profit corporation. So that actually could be considered, but that's in our employment contract, not in the administrative policy, so.
Who signed your employment contract?
Probably Will Goulet would be my guess. President of the board, whoever it was. I think Will was.
I think that's about right back then.
Because it was in there, you get 1 week a year free.
Okay, so I think we've established that it can apply to all three entities.
Okay.
Any other discussion?
No, I got one typo, but I'll just give that to Jeff and to fix. Just a sentence that doesn't make any sense, just needs to fix the typo in it.
Any other
Yes.
questions, concerns?
Yes. At our budget meeting yesterday, I think we had discussed there was one change in there regarding PTO. Did we ever figure out what that was?
Yeah, it was, a note from our executive session on this.
Okay. Well, I was just trying to figure out why we changed the calculation of the PTO, because I know we changed our in the executive session, we decided that you could roll over, we voted on that. But I don't know that we voted on actually changing the
Yes, we did.
PTO benefits that the employees were getting.
Yes, we did.
We did? Okay. That's nowhere in the minutes
No,
at all?
you're speaking about the 240
Yeah.
hours versus 256 on the accrual for the
Yeah.
long-term employees.
Yeah.
That was not part, the motion was the accrual and the carryover.
Yes.
It was
Okay.
not part of
Okay, it
that.
wasn't part of that.
But it was incorporated in here because it was talked about in that meeting.
This or that, or this was, or the?
Yeah, so we gathered comments in that meeting and compiled that.
Okay,
in.
all right, I didn't realize.
But it was not part of the motion, you're correct.
Okay,
So
so
the PTO motion.
So we did, did we vote to change the PTO hours that an employee can get during the year at that meeting?
No.
Okay, there we go.
Comment.
Okay, we're just commenting
Yes,
on
and
it.
we
Okay,
jotted it down, and would you agree with that, Jared? We received those comments and put those in there. I know it wasn't part of the vote, I read it
Okay.
yesterday.
well, anyways, Mr. President and the rest of the board of directors, we've got a difference between the first version we got this year and the one that we've got tonight. There's a difference in the employees and how much PTO they can earn.
At the highest,
Yeah.
for the longest tenured employee
Actually-
was 256 and it went to 240. I believe was
Actually,
the
it's-
only change.
They all have a little change. In other words, the 3 through 5 goes from 6.77 hours per pay period to 6.76. The next level goes from 8.31 to 8.3, and then the next one goes from 9.23 to 9.84. So I was just trying to figure out why did we why did we lower the employee's salary? Did the board agree to this, or did we make this change? In other words,
Well, no, I'm just threw me when you said lower their salary.
well, you cut their benefits. Is there a reason we did that?
I remember the discussion being that,
30 days a year.
that the amount of PTO was higher than what a lot of other comparable organizations have, and that if an employee were to run out of PTO, they had the ability to roll some of that over, and they also could take unpaid leave. And so I believe the discussion was, we thought that higher number was, for that highest tier, might be a little bit high.
Oh, okay, so we went from 30, we're gonna go to 30 days per year as opposed to 32 days per year, right?
Yes, I think that was the discussion.
Okay. I was on the phone
And
with
allow
that.
carryover, if I remember right, before we started this,
Yeah,
there was no carryover.
Yeah, we're gonna allow
But
it.
it started with 40 hours and we upped it to 80, so they allowed 80 hours.
Yeah, carry over.
Right.
But that doesn't really, that's not, doesn't change anybody's pay.
Changes their benefits, it gives them 80 extra hours.
No, it allows them to change, to carry the 80 hours over, but it's still the hours that they have. They had to earn it to get it. Okay, I was just,
All right, any other discussion?
yeah, on the complaint section on page 13 to 14, it says that once an employee has exhausted all of the resources, they can then go speak to the president of the board of directors. I think that should be changed to say any board member that they wish to speak to. Last year, we saw that was a problem. We did have employees that did not feel comfortable going to the president. This would have prohibited them from going to any other board member, and I think that should change. In my opinion, on page 11, the bullying section, your feelings shouldn't matter, but someone's intent should. That's my personal opinion. On the benefits on page 28.
Why don't we take these one at a time?
Oh, okay, well, I was just kind of going over what I had a problem with, but, okay, so y'all want to talk?
Let's start with your, the complaint.
The board member. Okay.
Yeah.
Because I want to discuss them publicly. So,
I tend to agree with Darrell that I think an employee should be able to talk to any board member if they are not getting appropriate response from either management or HR. They should feel comfortable being able to go to a board member. But, I think it does say that's a last resort. At some point, they're supposed to exhaust all
other resources.
all other
Yeah.
resources before they do that. I don't have a problem with making that any board of director member as opposed to the president.
I
Anybody
don't
else?
either, does it need a motion?
I agree with that.
Well,
Or are we just gonna?
we're making changes to this. The motion is to approve the manual as submitted. So we have to go with that, but we can have the motion amended to include all changes. Does anyone have a problem with changing it from the board president to a member of the board of directors?
Nope.
Okay? All right, so we're all in agreement on that? All right, next comment, Darrell.
I'm going to skip over the bullying one, but let's just go to benefits. Benefits on page 28. We currently have a situation to where if we hire an employee on the last day of the month and hire them and fire them on the 3rd of the month, we could still have to pay COBRA for them, I believe. Or we could still be subject to COBRA because it only would take them 1 day to get on our benefits plan. If you're employed, then your enrollment period is the 1st of the following month from when you're employed. So if you hire somebody on the last day of the year or the last day of the month, they're entitled on day 1 to start getting our benefits. I think that should be at least 30 days. Personally, I think it should be more like 60 or 90, but a minimum of 30 days. So after the second first.
What is that, what page is that on, Darrell?
That's on page 28.
28?
I don't think it's a good idea for us to, to be giving benefits to people who've been here for a couple of days.
I think a lot of companies have 90-day
Yeah,
waiting periods
I
on
think so.
benefits. That may be a little longer than we want, but
Yeah.
I've never
one
worked
day
for one
is-
that has 90. It hasn't been 30, but it's more along the lines of what Darrell said about the first day of the next month, whenever that is. Well, if you get hired on the second of 1 month,
60 days almost.
almost 60 days.
Yeah.
Has it impacted us
it could.
It has.
Has-
Yeah.
Okay. I agree with that change. Does anyone have any objection to that change?
I'd like to hear what the CEO thinks. I'm okay with it.
Jeff, what do you think about changing it from
30
the
to
first
60,
day of the next
60 to
month to the
90?
first day,
I think the first of the following month,
first of the following month?
If it falls.
30 to 60 day window.
Yeah, I would say that, but maybe make it the second first.
Second month.
Yeah,
But
whatever
that's
you
what I
say.
meant, that's what I
Yeah.
meant, yeah.
That's the word.
Y'all can wordsmith that to
Otherwise,
to have it,
That was a real good catch.
And that doesn't
like the
conflict with
wordsmith.
the actual contract with the provider? Their contract doesn't stipulate? That's all on us?
okay. Any other concerns, Darrell?
the only other one that I have, and this one's one that I've had since the very beginning, and I figure we should probably discuss it here, is on page 3. I can't remember what it says off the top of my head, but it was from a board training workshop in 2021 when the board came, 2020, what, 2020 or 2022 maybe? 22, where the board decided what it wanted to do for, its mission was for the year and what it wanted to work towards during the year. And now we're putting that in a permanent document. I would say replacing that and with our, Article 2 of our Articles of Incorporation, which has our mission in it, but printing up a bunch of employee handbooks that are supposed to be permanent records based on a 1-year action by a board of directors, which isn't even this board of directors anymore, just seems a little silly to me.
I'm looking on page 3 and I'm not.
It's
okay, it's on
page
it's
4.
for the vision, mission statement, and core values.
Yeah, that was just a board training workshop.
Well, but we did say that that would be our vision and our mission statement. I mean, future boards could change that. I doubt it would be modified to such an extent that it would be in conflict with
Okay.
a future employee or.
I'm not saying that it would conflict with it, I'm just saying that a future board could change it, and then you gotta reprint things.
I think it's a good thing that new employees see what is our vision, what is our mission statement, and if, this is a document we're approving for today. If that mission statement changes, they can do revisions to this manual in the future, but, as long as it's virtually the same, I like to have it in there, that's my opinion on that, but what does everybody else think?
I'm fine with it the way it is.
Yeah, I have no objections
We
with
have
the way it is.
consensus to leave that in there.
Yeah, I agree with you. At some point, if there is another mission statement that sounds better than that, so be it.
It may be better to
They had
look at
one the
this
year
thing
before
more
that,
than
too.
once every 7 years. This is
Yeah.
really kind of a living document. It's gonna
Right.
change.
Yeah.
Workplace standards are gonna change, so.
Right. Okay. Any other changes, Darrell?
No, that was it.
Any other changes by any other,
I
Bill?
have one on page 15, the third paragraph, talking about reviews again. It says employees have the right to express disagreement with any points made. I agree with that. Correct any inaccuracies. I don't agree with that. And make comments concerning all aspects of the review. I recommend you strike correct any inaccuracies because I don't think the employee has the right to change the basic document the way it's written. He can voice his disagreement with them and make written comments concerning it, but I don't know how you can correct any inaccuracies.
On page 15?
Yeah, page 15, paragraph 3. I think any inaccuracies would be part of the dispute that he would put in his written comments, that's all. I just think it's unclear.
If there's any inaccuracies, that would fall on the manager that did the write-up, did the review.
Yeah, and if the manager decides to change the write-up, that's fine, but I don't think, right here it says the employees have the right to correct inaccuracies, and I don't think they have that right.
I agree with you.
So I just recommend you strike the correct any inaccuracies out of that.
I'd like to ask Jared, what was the justification for having correct any inaccuracies in there?
Just a little one-liner.
Oh,
Where's that at?
Paragraph 3, page 15.
Page 15.
It's maybe paragraph 4.
I can see it being there.
correct, and, okay.
In case there was something that a manager misconstrued, maybe they can explain it in the review process. Maybe it comes off.
Then the manager can change the report. It says here the employee can change, correct inaccuracies.
Yeah, I think it's written, and it's probably written poorly. It's not meant that the employee can just change, strike through something.
Yeah.
It's, he can provide a space below that says, I disagree with what my supervisor said, that's
Well,
what.
he can do that.
Right, anybody do that, right? Yeah. You're right.
Okay, so we strike correct any inaccuracies from that paragraph? Is that what your suggestion is?
Yes.
Okay. Anybody have a problem with that?
Kind of do. I mean, if you've got if an employee has, gets an evaluation that they know for fact is incorrect, in other words, if something says that's provable was incorrect in that document, that employee should have the ability to go get it corrected.
I'd recommend making the comments / rebuttal.
Yeah.
Right, so you're not proving that my boss is always inaccurate. I don't
Yeah.
care how right he is,
But on this particular
he
issue
gets,
right
the employee
here,
gets to make a rebuttal.
that's
He
it.
does have some written comments.
Well, I would like to add rebuttal, because comments is one thing, an employee, but if they say a rebuttal,
Okay, instead make written rebuttal concerning all aspects of the review, or
I think comments is a little
Yeah.
more open to them.
I'm good either way.
Yeah. I like comments versus rebuttal, because it may not necessarily be a rebuttal.
So
It could
do
just
I.
be, a comment that, well, I did this because, I was trying to save somebody's life, or, whatever.
I would hope to think that any of our supervisors, who the employees would come to them and say, this is wrong in my report, would change that report. I would think our supervisors would do that.
Yeah, I don't think it should be the place of the employee to correct an inaccuracy. They
That's
can,
right.
they can
That's my
express
point.
disagreement or make written comments, but I agree, correcting inaccuracies are the responsibility of the manager or supervisor.
I think this is a question for our HR professional. Jared, if we have if an employee has incorrect data in their employee file, and they know that it's incorrect, do they have the, legal right to come and make HR fix it?
They have every legal right to come and express their why, but as the employee, come and say this, but the review is written by the supervisor would have to be there too, so you could have both sides of the story.
So you have just explained it, that to where the employee does have a legal right to come in and make a statement. So I think that what we're trying to change in this we need to make sure that this jives with what the correct employment law is, I
I think
think.
it does.
Does it?
Well, I think so. It says employees have the right to express disagreement with any points made and make written comments concerning all aspects of the review.
It does, but didn't we just say that we were gonna remove this word?
No, we're removing the.
Correct any
Correct
inaccuracies.
any inaccuracies.
Okay, correct any inaccuracies.
I'm personally in favor of removing that.
Okay.
Anybody else object?
No.
Okay, all right, so we're gonna strike that. Any other comments? I think we might be close to having a, employee manual after over a year.
Mr. President,
So-
before you call the vote, may I ask a clarification on page 13 in that bottom? There's two places where board president occurs. Is it to replace both of those instances with any board member?
Let me get to that
Yeah,
and look
where are
at
we at on
it.
that?
Third sentence from the bottom and the bottom sentence on 13.
Assuming based on the comments, I just want to be clear.
Yes, that would be my opinion on that. The sentence reads, at the conclusion of the complaint investigation, if you don't feel your case has been sufficiently reviewed, or if you're not satisfied by the conclusion, you may contact the board president, and that's going to be replaced by a member of the board of directors with your original complaint, supporting documentation and reason for your dissatisfaction. The last sentence is, if your complaint is about or against HR or the CEO, you may reach out directly to the board president. We would replace that with to a member of the board of directors.
And then the unstated rule is that board of directors should bring it before the CEO and the whole board.
Exactly, yeah. But, you know, it allows the employee to bring their concern to a board member so that it can be brought to the whole board.
A board member cannot make any decisions by himself.
Good clarification. All right, so the motion was to approve the employee handbook as submitted. We need an amendment to that motion. I don't remember who made the motion to approve it, but we need an amendment to adopt it with the changes that we discussed tonight.
That was me, I believe.
Motion was made by Dave.
David, okay.
That was me.
David, would you amend your motion?
Yeah, I would like the motion to amend it with the corrections that we discussed.
Okay. Do we have an
I'll
amended
second.
second?
I'll second.
Any other discussion? All in favor say aye.
Aye.
Aye. Nays or abstentions? Motion carries. We have an employee handbook.
Mr. President? No, we actually do. Mr. President, I would like to make a motion as an addendum to the employee handbook, and we just got done talking about it. I make a motion that should any member of the board of directors be contacted by any employee, as pertains to this employee handbook, that they will contact the board president within 24 hours. That way we don't have individual board members dealing with employees. The entire board, or at least the board president can.
Okay, do we have a motion? Do we have a second?
I'll second that. I'm fine with it.
Any discussion on that? And that's not an amendment to the employee handbook,
That's a board policy.
Board.
Yeah, that's why it doesn't have anything to do
So
with
would
the.
we be adding that to our code of conduct as a board of directors?
Actually, just as a separate individual policy.
Okay.
Yeah.
Barbara, I see you got your hand up.
We're a little confused here. There's a complaint process.
The president or whoever gets contacted has 24 hours to let the whole board know?
No. The board member that's contacted has 24 hours to contact the president of the board of directors. And that way the president of the board of directors can decide how to take care of it.
I was verifying what
Yeah.
documentation on the
Yeah.
employee.
No.
Yeah,
That's why I
not
didn't
part of
want to,
the amendment.
that's why I didn't want anything about this to be in the handbook, because it's a board.
Does anyone have a copy of the bylaws with them?
Yes.
Yes.
Is there a conflict with the complaint or filing a grievance? Is how that process is it addressed in the bylaws on filing a grievance?
Bylaws of the
Filing of our
company.
water system?
Not for employees, I don't believe. I know it does for board members, but I don't know that it does for employees.
I don't remember seeing it in there.
It might be the grievance for board members,
I think that's what that relates to,
but
Barbara.
not employee related.
Right. This is if an employee comes to a director.
There is a process by which if a board member has a concern about another board.
Right. Okay. All right, so we had a motion and a second. Any other discussion? All in favor say aye. Aye. Nays or abstentions? Motion carries. All righty. Anything else on that? If not, we're going to keep moving. CEO update, Mr. Krigler.
Yes, so we'll hit on two items real quick as updates. Our commercial review policy for impact fees. Corey's still working diligently to close out the last several account reviews. For instance, we had one that had some issues with getting their documentation in a timely manner. We're working through that. So we really expect to have these wrapped up hopefully in the next month or so, but it just, having to go back and look at the historical documents and go back and forth with the owners, it just takes time, and unfortunately, a lot of these last minute ones, they didn't look at it till the last minute, so we've had to really kind of work with them to speed it along. Corey's given a few of them some extended deadlines to May, and we're working to push that, so it's moving. We just got to wrap up the last few. Real quick on the pool fill policy, so staff has reached out to the Water Management District for clarification on this. We did receive a response actually yesterday that we've been reviewing, but we still are planning to have a call with their the chief of the regulatory group there. You know, the way they respond to their emails is it's just not super clear all the time. So we're still working on that issue. It sounds like it's a simple issue, but it inevitably ends up at a discussion of rates and rate structures, and it ends up being, you know, fairly complicated. So we are working towards that. We hope to have clarity for the May board meeting that we're working towards.
Okay. Any questions for Mr. Krigler regarding that? All right, we're going to move on to our review of February 2023 financials. Jeff, you're up again.
Yes. Barbara, you want to take this one? We don't.
Yeah,
We
we
have
don't
a whole
have much to report. It was a good month. The revenues were up, the expenses were down. So we had the net income of $55,000, so pretty good month.
Okay.
Yes.
Any questions regarding the financials? If not, I'd like to get a motion to approve the financials for February as submitted.
One thing that I just want to, let me look real quick, because we did discuss this at the club. The board of directors, the managers at the golf club, we did not approve our financials this month. And we also at our meeting discussed the fact that we know that these financials aren't completely correct, right? Because of the adjustments that the CPA said we needed to make. So whenever we're approving the financials tonight, just realize that these financials are not correct.
Those adjustments are in the financials, are they not?
No.
The ones that's in this packet are.
Oh, okay, they are?
The ones that were at
The ones that we had
meeting
before
were
weren't.
Just for the
Okay,
time
so
of
we
the-
had, yeah, okay.
The ones that are in the packet include the recommendations.
Okay.
That's correct.
All right. Do we have a motion to approve the financials, February financials as submitted?
So moved.
All right.
Second.
We have a motion and a second. Any other discussion? All in favor say aye.
Aye.
Aye. Nays or abstentions? Motion carries. Okay, moving right along. We've got director updates. First up is Director Campbell on the Finance Committee.
Due to professional commitments, I was not available for the finance, and I had let Mr. Krigler know, and it's going to be a recurring thing for me on Mondays in my consulting gig, so we can look to move that. I have nothing for this.
Okay. Capital Improvement, Director Linnell.
Similarly, but for a different reason, I also missed the meeting. If there was anything, I'll need Jeff to report.
Yeah, I can give a quick update on that one. We went over all the projects. Basically, the big takeaway there is we've got, you know, several large projects that will be going out to bid this summer. We've got Phase 1A of the Eggman project. We've got the water booster station and tank, and we've got the warehouse across the street that we're all hoping to push out to bid. So we're also looking at a slight adjustment to the format of that meeting. In the past, it was more of a financial type meeting. We'd like to keep it like that, but add more status of the projects and the financials. And that's how we ran the meeting. It was productive, so we'll do that. That committee will meet again in June, and we'll do it that way.
Okay.
Okay, so stand by month, okay.
All right, Budget OEM, Director Lynchard.
We had our meeting the other day, and it was my second meeting, and I think it was Jeff's second meeting. And neither one of us have been to a regular meeting before, so we really didn't know what the purpose of the committee is without a little bit of direction, or I didn't anyways, but I think we've got it figured out now. We're going to do a little bit do some different things next month.
Yeah, really.
And tie it back to the
Analysis of the budget, where we are year to
more
date,
so
yes.
than just the financials.
Budget tends to heat up in the later
Yeah,
part of the year,
exactly.
but you're mainly just trying to make sure we're on budget.
Yes.
Okay. Santa Rosa County Reuse Project, Eglin, that's me, and we had a really good meeting because we have a signed lease. I think all the board's aware of that, but I want to make sure everybody knows that the Air Force did sign the lease. So our next two, I guess, tasks to do to keep us on track is to go through the property acquisition phase. That's, handled through the county, and I believe Mr. Dunaway is going to be a part of that. And then also, I think there were some environmental requirements that Eglin has for us that we've got to tick some boxes before we can keep that portion of the project on track. But overall, getting this lease is what we've been waiting on for a year or more. And so, we got that, and everything's on schedule to move forward.
Mr. President, I did want to update the board on one matter regarding that. I talked late this afternoon with the county attorney, Mr. Danheiser, and on next week's agenda for the Board of County Commissioners will be the authority to proceed with the right-of-way acquisition. So if you see that on the agenda, Mr. Danheiser tells me that will be there, so should be going forward.
We're not expecting any opposition to that, are we?
From
anyone at that county meeting? I mean, I'm sure individual
the
property owners-
commissioners are supportive of the project. There's no indication from Mr. Danheiser that there's anything other than full support to move forward.
All right.
That action, just so this board understands, that action is necessary because, again, it is the county's project, it is the county's lease, and the county has the police authority, police powers for the acquisition. Right away acquisition.
Okay, next up, Club at Hidden Creek Management Board, Mr. Krigler.
Yeah, so I would say there that really implementing the audit recommendations has been the main driver lately, taking up a lot of Kim's time, and Barbara's been helping out a lot on that as well. The only other thing I would like to point out is just that the weather continues to help on the revenue side. Really good revenue numbers year over year. So, we're hopeful we can continue that.
Okay, and then Fairpoint?
Yes, so Fairpoint, we're still working on the member agreements. We hope to have those either in May or June. We've got to get our working group back together one more time and then go back to Beggs and Lane to complete those. We did approve the budget at our March Fairpoint meeting. And they did talk about moving that to a end of the year process versus March. So try to align more with how we do our budget in terms of timing. So we're going to try to implement that going forward. And then just on a positive note, we had a real nice turnout for the ribbon cutting for Well 7. We had several of the Holly Navarre board members attend that are not on the Fairpoint board, so we appreciate that. So it was a good event.
Okay, good deal. And then Municipal Engineering, Mr. Phillips.
We didn't have a meeting this month. We will be having a meeting in the next couple of weeks now that the audit is done, close out our stuff.
Okay.
I got one question. So did he renege on the GPR so you can keep this camera?
No,
Or
he
you did
is-
both.
He is anxious for me to write a check so that he can have his GPR. And for the board's information specifically, we have to return any profit that we make from Holly Navarre each year. And we do a profit elimination as part of the budget process for Holly Navarre, and that identifies what that number is. I'll say it out loud and I'll be wrong, but somehow Kristen has modified that, and I haven't seen it, but it's about $68,000 or something like that. We set our hourly rates not to make money, but we do make money because of overtime and the lump sum job, so we return that. He's already spent it.
All right, that's concludes our director's update. Board of Directors Selection Committee, Mr. Krigler.
Yes, so this is in relation to our corporate insurance. We do have a request for qualifications out on the street. That's due on end of the month, on April 28th. So our plan is to bring that back in May for award of an agent. And then we would have quotes for our June board meeting, and that would allow us to hit our July 1 insurance renewals. Most of the policies are July 1 to July 1. Some are throughout the year, but we're gonna work to try to get it all on that July 1 cycle. What we'd like to do is we intend to have a selection committee for this selection of the insurance agent, and it'll essentially be scoring, reading the proposals and scoring them. And there's probably two ways we can do this. I have on here, we could do 3 staff and appoint 2 board of directors representatives, and that could be a selection committee. Or, as I was thinking more about this today, another way to do it, since the insurance is for Holly Navarre and the 2 entities, we could have 3 Holly Navarre staff, 1 Messy staff, and one club representative as the selection committee. So we really can do it either way, and I think we'll arrive at a good place. So, like I said, I originally had written this as, have two board of directors members on the selection committee and three staff. But I think we can consider those 2 options.
And either way, it's the committee is gonna make a recommendation, and then the board will either approve that recommendation or not.
Absolutely. So we would bring the recommendation of that committee to the board in May.
Right.
And that's what awards the contract, obviously, not just a recommendation. The committee just scores the proposals, and we make a recommendation.
Any
Mr. President,
comments from the board on that?
I'd like to make a motion that staff handle the procurement of all the bids and the information, and staff go through the information and rank them and bring them back to the board as a whole for us to discuss and select.
Right. I kind of like that, rather than have 1 or 2 of our board members on that. I'd rather
Given
it be
the
a
previous
staff function.
discussions, right?
Right. Anybody else have comments on that? Okay. I don't think we need
There's probably
any
nothing to
action
vote on
that,
there.
do we? Or- Well, you
No.
got a motion. So.
I made a motion, but it didn't get a second. So.
Well,
Second.
we'll second it. Okay.
Okay.
All right, so got a motion and a second. Any other discussion? All in favor, say aye. Aye. Nays or abstention? Motion carries. Next up is the award of a forensic audit. Mr. Krigler.
Yeah, so the board had discussed proceeding with this after completion of our regular annual audit. We certainly didn't want those 2 entities in there at the same time. It would cause a lot of issues with our finance staff. So I think we made a conscious decision to get through this Warren Averett audit, the annual audit, and then revisit this. I did reach out to Carr, Riggs and Ingram. They are willing to honor the price that they gave back in late 2022. And we feel that their proposal really is the best value when you compare scope and dollars for what they're providing. So that's what we're recommending proceeding with.
Yeah, one of the proposals was under 100,000. This one comes in just under 40.
Right.
Which is I think our prior board action was that we would spend up to 50,000 on it. So this falls within that.
I'd like to make a motion that we award the contract for forensic audit to Carr, Riggs and Ingram.
I'll second.
Okay. Any other discussion?
Jeff, just to confirm that, I'm sorry. Go ahead.
Go ahead.
So just to confirm your discussions with those, this is not just a rehash 6 months of an audit. This is actually step by step, item by item, a forensic audit. Not just a 6 months of.
Well, he has a specific scope to look at 6 months of transactions related to the CEO. That's in his scope.
Got it, okay.
Okay. Any other discussion?
Yeah, question, if I've seen it, I've forgotten. I haven't seen the scope. I haven't seen any of the proposals.
I have no problem sending those out.
I wish you would, and
Yeah, that
I'll
was,
need to
that
see
all
it
came
before I
in,
vote.
yeah. They came in like late 2022, so I don't know who saw what.
Yeah.
Yeah, I'll send that.
Okay. Any other discussion? Any discussion from anyone in the membership? Because I know that was a big concern of our members. All right, all in favor say aye.
Aye.
Nays or abstention?
Nay.
Motion carries.
Nay.
Okay. 2023 pension contribution, Mr. Krigler.
Yeah, so Kristen kind of touched on kind of the big picture aspects of the plan and long-term, but we do have 2 retirees this year that are wanting to take the lump sum payment. And we've been advised by our actuary that we would need to make a 2022 contribution to be able to maintain what's called the 80% funding level. And you have to be at that level to make those lump sum payments. So your packet includes a report done by the actuary. This was done last year sometime. And it also includes an email regarding the amount of the 2022 contribution. The retiring employee has requested the lump sum payout in May, so that's kind of driving the timing of this request, and it affects the amount of the request as well. The other part of this item is that we add the CEO as a trustee on both retirement plans. I believe it's the 2 members of the 401k and pension committee are the trustees. When we were meeting with our financial advisor from Wells Fargo, he suggested we add the CEO as well. It may help out with just some of the administrative functions and just help some things move quicker. It wouldn't affect any big decisions.
I have a question. We had not budgeted this year we didn't make the payment last year, and this is the payment for 2022. That probably should have been made that wasn't. And
Well, based upon the information we had, it
Right,
didn't be disregarded.
right,
We made the decision not to because we weren't aware, I wasn't aware of the original message that came out in May. That was not passed on to me from our previous finance director. However, the requirement to maintain it at 80% in order to make lump sum payments is the issue.
right,
If the employee wanted to take monthly, it would not be an issue. We wouldn't have to
Right.
make any payments.
right. Yeah, no, I understand. It's
So, and I
hindsight.
think we need to honor the lump sum payments because we've done it in the past, so I think we need to make the payment.
Right, no, I'm not opposed to that, it's not in our budget, so what are we gonna modify in the budget to accomplish that? Now we're looking at 750 instead of 394.
And I have another question there, Mark, because you mentioned 1 employee and another one coming up. Is there anybody else? Because the trend for the last 3 people have taken lump sums and not
We expect the first 2 to definitely take the lump sum. Jared, I believe you mentioned a 3rd employee who's not with the company anymore that would be in the fall, possibly.
Okay, but not, so looking forward, you're looking at maybe even more after this,
If they take.
if they take the lump sum.
I think that's about the 3rd employee. Because I don't think the 3rd employee's been contacted or notified as to their plans. Okay.
Jeff, can I just ask that we look
We'll
forward for the
confirm,
next
yeah.
year of, anybody employing me kind of plans they're gonna take the lump sum? Because if this is a growing trend, obviously they don't trust our pension plan versus their own financial acumen.
Right. Yeah, we'll confirm that.
I'd like to ask that this be put on the agenda for the next budget OEM meeting, because there needs to be a budget modification for this, since it's not an unbudgeted item.
Well, the thing is, then it'll be more of a payment then. I mean, that's fine if that's what you want to do, but the 393 is based upon doing it before 1 May, right?
That's right.
Oh, we got to make the payment. There's no question about that, but I think.
It'll be more than 393, so you need to get that number.
Right. Well, 393, I think, was before.
Yeah, it's a 2022 number. That's a good number.
Yeah. But nevertheless, the budget committee needs to do a budget.
Oh, you're talking about approving the 393 this meeting, but
Yes.
just figure out what to do. Okay, I agree.
Yeah, they got to find the money, after the fact, but they got to find it. But we've got to make the payment. I don't think we cannot do that. All right. I don't think we have a motion yet.
You want to? I'll make a motion. 393?
To approve staff's recommendation?
Yep.
Okay. Do we have a
I
second?
second.
Okay, any other discussion? All in favor say aye. Aye. Nays or abstentions? Motion carries. Engineering, master meter policy for private developments. This came up last month, and Brett Ramsey came to us about this, and I'm going to turn it over to Mr. Prigler.
Yeah, so staff drafted a memo about master metering of private developments and how we should handle that from a policy perspective. Basically, it comes down to how we handle our facilities on private property. The memo talks about both liability issues and operation and maintenance issues with taking on those private developments. So whenever we get an application for a system extension, we perform a detailed review of that, and we really try to be consistent with those reviews. We have had 2 other developments that have come in and required them to be master metered that were similar type of developments. 3 plus the 3 in addition to this one.
Yes.
Yeah, that we require master meters. So we're trying to be consistent with these reviews, and we're trying to do a review that's fair to everybody, but also protects the interests of the system. So that's how we've arrived at this place, and we hope the memo kind of makes that case.
So these 3 upcoming, they're new ones.
One is actually about to completely close out everything, so that'll be a completed project. We're just waiting on final DEP clearance on that and as-built stuff. And then the other 2, they are in the process of getting project approval. They're under review, have not yet started
But they're
construction.
all under this, fall under this new paradigm. 1 meter for a private property.
And it's always a case-by-case basis. We're still reviewing these. If there's a benefit to the system, then we'll
Yeah,
talk
I try
about
to
it.
look to see if there's anything of future growth would help. Why we would take it over to help with future growth and maybe help out other subdivisions, but whenever there's no benefit and everything around it has been built out, it serves no purpose to us to take over utilities on private property.
Is this a situation where the contractor could come to you as they're doing the plans, making the plans, and you could advise them on how they could structure their subdivision, townhomes, apartments, so that we could take it over without having a master meter?
I can't really do that because I'm not their engineer of record, but their engineer of record's well aware of what they could do, and
Okay.
essentially it comes down to them probably not wanting to meet county requirements, and the county won't take ownership of a right-of-way if it's attached housing, multifamily housing. So they are aware of
They
that.
are aware, okay.
I'm going to be the bad guy, and staff's not going to like my comments on this, but I've talked with Jeff about this, and you know, for the 50 years that we've been in existence, we have been individually metering property that are on private roads. We've been going on to private roads to fix those. Most people don't even know that those roads are private. The east entrance to Robertall is a private road. Not everybody knows that. Most people don't know that. It's a private road. The county doesn't maintain that. Villa Danielle is private. Treasure Isle is private. And those are single-family houses on larger lots. You know, I'm not in favor of the way that it's, I understand that it's more difficult when you get townhouses and you get more tighter knit communities to go in there and work on it. But, you know, when it's an individual house or an individual townhouse that somebody owns and they own the land, I think it's our duty to our membership and our service area to provide water service and to individually meter that. I don't agree with this change, and this change happened over the last year without the board of directors being involved in this change. And, you know, all of a sudden people were being told that, you know, oh, we're doing it this way now. I don't agree with that. I think it is not the way it should have happened, and I don't like the fact that we're now going to be telling, you know, anyone developing a subdivision with a private road, oh, we can't individually meter your properties. I have no problem if it's condominium or an apartment complex or if individually owned, that it's there's a master meter. But when it's individual homes that people own on their own lot, we need to provide that service to them. Yes, there may be some additional costs involved, and I think we should pass that cost on to them. But you know, in whatever format that might be, but I'm not in favor of this policy.
So, I got a, go ahead.
Obviously, we individually meter homes, but we don't individually meter apartment complexes or hotels.
Not there, but those are owned by one entity, not individual entities.
You're correct, but they're also vastly different. You know, one's a house and one's this huge apartment building. And in the middle, you've got these townhomes where they're built right up together, and it makes it to where we might not have, staff may not even have authorization to fix a water line that it's required to build. If you've got these townhomes built right on top of one another, the water leak to your home might be under my house. Now you've got to get under my house or break up my driveway to get to your water line. Our staff shouldn't be required to get involved in that kind of stuff.
Well, that happens on public property too, because
Yes.
if it's, and it's through the easement that the utility has.
Yes, and we have an easement there, but you don't have an easement on private
Well,
property.
we can make sure that that development includes a utility easement. We don't have to approve it unless it includes a utility easement.
I don't know that they can.
Yeah, there's easements on, utility easements on public and private property.
So my question to staff is that this is not just because it's private property, but the density. Because it mirrors an apartment complex, you can't get in between them, like Daryl says, the leak could be on somebody. So it's not just the private property aspect of it, it's the density as well? Make me smart on that.
Yeah, well, yes, that is true. But let me correct one thing that Mark, I don't know if he intended to, but he kind of threw staff under the bus there. This is not something that started in the last year. It is absolutely, positively true that in the past, Holly Navarre has taken utilities for operation and maintenance on private property. This is not something that started in the last year. It's something that started long before that. I'll give you an example. And it doesn't matter whether it's residential or commercial. That big commercial subdivision behind Aldi, the grocery store back there, we don't own and maintain those utilities in there. We applied the same rule they chose to make that commercial property, private property on those roads back there. We make every single one of those come to the right of way of 98 to get service. So it's not something that's been done the last year. But it is absolutely true that in the past, in years past, those old subdivisions, Holly Navarre did take the utilities for operation and maintenance. Again, should you be doing it is different than the fact that it was done in the past. There's several issues. One, it's private property, and I don't care what agreement we sign, and there's your attorney right there, you can ask him. I don't care what agreement we sign. That's their property, and on a day-to-day basis, if an agreement says you can't do something, they're gonna go do it anyway. And then we have to fight and spend money to affect that agreement with those folks. Yes, private developments are private for a reason. The county has decided that for many reasons, they won't take that right of way because of certain reasons. Amongst those reasons, I would suggest includes density of utilities, non-standard driveways, even if the right of way is the proper width. Do some of those things affect the water and sewer lines? No, they don't. Do some of them affect the water and sewer? Yeah, they do. I would suggest that the people here, the very primary reason not to do it is it's private property and the liability and the just legal headaches for going onto somebody else's private property. And there was an example, I think, well, no, we kind of took some of the examples out. It just turns into a nightmare. He's already spent money on at least one case where this has happened to us. That's our primary reason. I can't.
No,
In the case of Brett's subdivision, it is absolutely true that because it's multifamily, and he's actually got a pretty wide right of way. His right of way probably meets county standards. In fact, his entryway is quite wide. It's wider than right of way standards. But dang, between the sidewalks and the driveways, yeah, it's going to cost more to maintain that facility in there than it is somewhere else. So
I understand, I support it. My only concern is, like everything I found a lot with the water system, is it's not written anywhere. So I find out by word of mouth or last thing, and so if we're gonna add it as the general requirements are out, but it hasn't been there in the past, that's what you're telling me.
So again, that point's been made, and let me make a suggestion. It's private property. Does anyone up there on that board expect that anywhere in this system, regardless of this argument, that we would take utilities on private property? Of course not. I mean, is this a different situation than a grocery store or a grocery store that needs a fire line around behind it? We don't own and maintain that. We make them put a big old backflow preventer in the right of way. Is it different? It's occupiable, yes. So, yeah, it's different. I grant him that. And some of these, do they get to own their own property as opposed to the apartment guys that don't? Yes, they do. But would we do the same for a condo that looks like an apartment? Well, now they own their condo.
There's a difference. They don't own the land.
No, you're actually.
The condo doesn't own
They own
the
an
land.
interest in it, but
Well,
you're
but
right.
they don't individually own the
They
land.
don't individually own the land, so it's just, it's a board decision.
No, I support, the only thing in my head was, okay, does it benefit if there's somehow, I know the bylaws don't allow, but that's 30 members, 30 votes versus one vote HOA, but that's small fry.
That's
In
what I
In an
was,
apartment complex.
and the cost.
I got, no, but again, it's private
Did I hear
property.
you correctly that development behind Aldi's is 1 meter?
The Firestone and the,
It's multiple
Dunkin'.
meters. Everyone that goes back there will be required to find a way to comply with our requirements to be metered.
that's gonna be a church, but yeah, that meter, all the other meters in front of it are coming out the 98. That meter is going on a water main, but that's the case where we
And my
are.
only point there was, this isn't a change that's been made in the last year, Mark. This has
No,
been something
but
that
that's my point.
But
Each
Reserve
one-
Point was done with individual meters, and that's still being built out. I mean, it's still being
So
done with
I don't know.
individual
Are
meters.
those all individual
Behind the
members
shrimp
then, because they
basket.
have their own meter inside?
I'm sorry,
Guys,
what's the, I can't.
just maybe to help the board members out just a little bit, boards make policy, and then boards decide that they don't really want to follow those policies. So they give their buddies breaks. That doesn't have anything to do with staff. So just because in the past we've taken these private things, that doesn't necessarily mean that staff wanted to do it or it was in accordance with any
I'm
policy
not saying
we
that, I
had.
was just saying, had it been done this way in the past, I agree with you.
Yeah,
Boards in
it's
the
been-
past,
it's been
boards in
done
the
both
past
ways.
have done things that probably
Yeah.
shouldn't have done.
Yeah.
Oh, Mark is right. There's plenty of places in here that are private roads that Holly Navarre has agreed to, or
And continues
maybe
to
not
maintain.
agreed to, but
But
they
the question
did.
for Aldi, that development there, each of those have their own meter, so they're all members?
Yes,
Is that
sir.
correct? Okay. That was a confusion.
Yeah.
The way I understood, they said they had to go to 98, so I thought it was 1 meter. Our stop at 98.
Oh, no, it's individual.
Okay.
So my thoughts on this is, it seems to me like there, in the absence of a written policy, that's where the confusion is. You know, who makes the final decision? How can we keep it consistent? How can we make sure that it is in the best interest of the water company to take this or not take this? Can we have I know we've got an outline and some information on how you choose and decide, but can we come up with a policy?
There's one at the end of that.
There
The
is,
last
okay.
paragraph.
Last paragraph?
Last
Okay.
paragraph is the policy.
I missed that.
Yeah, there's never
And
been
it's more of a clarification to the policy, because there's
Okay.
no policy that insists that we take ownership
Yeah,
of
you wouldn't
utilities on-
expect that there would be a policy that says you do take it. You would expect the private property versus public property to be the distinguishing line. Every detail of a meter or anything that we have would say that.
It already has that one.
But these guys do ask for clarification, whatever you vote on tonight, that there be a policy so that.
Right, but even in the policy, you know, we can make it clear that it is on a case-by-case basis.
Yeah,
Still,
and I think
and it says
states
that,
And
right.
staff does make judgment in that case.
Right.
And for instance, Brett's last subdivision is one of those deals. It's a private subdivision, but it was to the benefit of all our members to eliminate a lift station. So we did, by tying them into a lift station. And then we caused a whole nother problem, we made private property that.
Which
put
we
us-
didn't have an easement for. And that,
Through no fault of our own.
But we ended up with an attorney.
and board members, if there's anything that was different, and one of the things is that, Corey, as a system engineer, has been very diligent in ensuring that we have the proper easements so that we have the proper legal access. And, over the past couple of years, we put in place, the leases and the agreements into, plats as the county does, when they go through the process, so that we don't end up in the situation which we did when we got into a situation in which and this was actually what happened. We went to tie in this case, Ramsey's subdivision into our lift station, which was in the back of a private subdivision of single-family homes, over which we had no legal access to, and we had no actual legal ownership of the lift station, which we owned, built, and maintained. And so when we got into a conflict with the HOA, I simply called their attorney and said, we're coming out there to put a master meter in, and you figure out how to pay, how to charge all of the 100 people for their water. And they went, we'd like to grant you an easement. And that's what happened, and that's how we solved that. So now we have an easement over that private road so that we can get there. We're making sure that all of the future projects, we don't have to go in reverse and get that. We're getting that up front, and that's what Corey's doing.
Makes sense.
And I think that if we make a policy about the private properties at this point, they can always come before the board and ask for leniency. I mean, I can think.
that's
I
what
can-
the policy.
I can-
That's what's in.
I can think of
What this
ways
guy did.
to make a private subdivision that you'd probably still take. I mean, you can make one private that meets all the county's county's requirements and just decide you want it private.
You can.
But if it benefits Holly of our water system, maybe we would take it. So, but that's something that they can come up and tell us. So do we have a motion at this point?
We don't, and I'd like a clarification what staff is wanting us to do tonight.
Well,
I think it's to update our kind of guidelines, standards, and specs with the language at the end of the memo.
at the end.
Part one.
It's on page 4 of your tab, at tab 7. It's on page 4 of the memo from staff, is a recommendation, and it has the language there.
Read that last paragraph.
well, I think to be fair, the board has been asked to act on a question by a developer. I
Yeah.
don't think.
All right.
I'm gonna read what it says on the recommendation. Update the existing Part 1 general requirement of the Holly Noir Water System Guidelines, Standards, and Specification with the following language pertaining to ownership of utilities within private developments. Holly Navarre Water System will not accept ownership of water, wastewater, or reclaimed water utilities on private property as part of a private development project. The only exception to this is if Holly Navarre Water System determines that there is a benefit to the entire utility system, take ownership of these utilities. Holly Navarre Water System Engineering, Operations, and the CEO will make the final determination of if such benefits exist and make a recommendation to the Holly Navarre Water System Board of Directors that Holly Navarre Water System accept ownership of the proposed utilities. That's the recommendation.
I make a motion to do this thing, for that.
Okay.
I'll second.
My discussion is, I think we're moving in the wrong direction. I think we, as part of our franchise area, we should offer individual metering to those types of developments. But, we should be, as part of their project approval, creating any easements that we need to maintain it, and we need to create some type of cost. If it's gonna cost us more to maintain it, then we need to increase the cost to that developer somehow. But I think just to say we're not gonna do it, I don't, after many years of doing it, I'm not in favor of it, but that's my opinion. We've got 7 votes here. Any other discussion?
Mine is the member, right? There's 30 or 40 or 50 members that are not gonna be members now. And they're gonna pay the same rate as everyone else.
Yeah, but,
I understand, it's a tough one.
Yeah, I agree.
but.
Any other board discussion?
Yeah, I've got more discussion on it. You know, on the other side of that is, you can go out in front of my house and you can dig up the water line with a shovel in the sand. It's absolutely no maintenance if we have any problems in my house. But part of my water bill is gonna be going to maintain this, private development. And you can't stick a shovel in the ground out there. You gotta dig up under people's foundations and driveways or sidewalks because everything's concrete. Why should I subsidize their development with my bill?
You already are.
I know, but you understand the cost goes up. I think I'm kind of in between the whole thing. I think that we should probably come up with a plan to make it to where it's equitable. But I think that individually metering townhomes or apartment complexes is a bad idea for the rest of the membership. I think it costs the rest of the membership more money by doing it that way.
Yeah, I'm
And
not
if
in
you've
favor
got-
of apartment complexes, but townhouses are different than apartments.
Not a
You
lot.
own the land.
Not from
but
Not on the
apartment,
dirt, not
you've got
from
one
the.
owner in an
Yeah,
apartment.
yeah, but not from the ground view. In other words, if you're working, I would imagine that if you're working on that, the townhome, it's just as difficult as an apartment complex, other than the number of water lines running in there.
Any other board discussion? Mr. Cosby?
How many, in the past, how many lawsuits have you guys had because of this issue?
I don't know that we've ever been sued because of this issue, have we?
Right, not since I've been the board. We've
Okay.
never been at we've
And,
worked through many easement
Right.
issues.
and last month, I believe it was Mr. Ramsey that was trying to work with you guys. Just like what Mr. Lynchard was saying, yeah, you don't want to subsidize it, but, you know, you find a way to make it to where it's going to cost them more or what have you, based on the layout of the development. So if you hadn't had any lawsuits in the past, and, because I agree with Mr. Miller, you're here to serve, so you gotta, you know, like Mr. Ramsey said, he had a bunch of options. He says he was gonna lay it on the HOA to charge those 33, you know, customers. So where there's a will, there's a way.
Any other discussion? I'll call the vote. All in favor of adopting this change to our policy, say aye.
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 All opposed? That would be me.
Nay.
Okay, we've got 5 to 2, motion carries.
The other name.
Uh,
Thanks, Mike.
All right, lift station repair, Mr. Quigley.
Yes, so this last item on the main agenda here is for some air release valve repairs / replacement at, I believe, 12 different lift stations throughout our system. This work will be done by Pensacola Concrete, and I believe our Mark Turner did get bids on this work, so.
Fiscal impact is $30,434.10, and the breakdown is in everybody's packet. Do I have a motion?
I only see the bids, I only see the one, there weren't different bids.
There are 2 other bids.
They're not in the packet. Would they be in the packet, or is this just the cheapest?
They would have been in the packet.
Maybe I'm not seeing.
No, they're not in the packet. That was my question too. I don't have any problem with Pensacola. I thought maybe they were the only ones that did this stuff. I don't know if you had. if you had that problem.
This was another one where we approved.
Hydro Service was a bidder, I think they declined to bid on it, and,
Who was it?
WDR,
It was.
I think it's WDR had the other bid.
Can we just, I'd like to get, was Pensacola Concrete the least expensive?
Yes.
And Jeff, can we just get all 3 next time?
Yeah.
I'll make them, did they make a motion to approve it?
We haven't yet.
Okay. I'll make a motion to approve the Pensacola
I'll
concrete
second
for
it.
repairs.
I'll second it.
Okay, any discussion?
Just Clinton, real quick, you worked with the Pensacola, concrete before. They do a good job.
Yes, sir.
Happy with their work and their customer service.
Yeah.
Okay.
I think we wrote a check for $250,000.
They don't
for them
take
this
you on
month.
vacation, do they?
No, they don't.
They have as much time off as you guys?
Any other discussion? All in favor say aye.
Aye.
Nays or abstention? Motion carries. Engineering, Mr. Phillips.
I still an issue, 144,000 gallons a day last month. They're looking for it. I'm sure Clinton can tell you all about it, but that's the big number. We're, as just a reminder of picking data out on this page, and I'll also add a little bit to the Eglin commentary earlier. Our current limit is 1.968 million gallons per day on an annual average daily basis. So even with the 144,000 gallons a day, the total wastewater process last month was 1.706. So we've got 262,000 gallons per day on an annual average basis of capacity left prior to putting the Eglin project into service. Or alternatively, if Gulf Breeze were to build phase 3 quicker than we actually put that phase, which I don't think will happen, but that's another possibility. So we still seem to be okay capacity-wise, especially now that we have a lease in hand. I'll add to Mark's commentary. The lease was issued. There is a requirement in the lease to coordinate and obtain local approval. That's not the exact term, but that's effectively what it is. Plans were submitted to local Eglin for that approval. That overarching approval has now been granted from them. However, there are some additional conditions that have to be met either prior to bid or prior to notice to proceed on the site. There is a dig permit required. There is a requirement to, once again, make sure the cockaded woodpecker is not a problem within the area that we want to construct. What's that? And the third item is gopher tortoise. We have to do a survey to make sure that there are none there, and if there are, they have to be relocated. The fourth significant requirement, is that there is a requirement to make and then provide a kind of an overarching environmental plan for the construction. We have asked Jacobs to give us a price for those items that need to be accomplished by us / the county before we can either bid or give notice to proceed for that project. We don't believe any of those things is going to take a long time. In fact, kind of talking about an early May advertisement for the project, just to give you an idea of where we're at right now. So it looks like in the next 30 days, that project hopefully will get advertised. It'll be out, we'll put it out for bid for 5 weeks. Then we'll open bids, and there's no other stipulations required for us to award the project and then issue notice to proceed besides those items. So it looks like this summer we're going to be under construction on phase 1A, which is all of the construction located on the Air Force's property, including the ribs. So
When do you think you're gonna start tunneling under the bay?
I don't want to put words in Will's mouth, but the first step in getting phase 1B to bid is for someone to be selected to do the work for the county for the legal requirements for the easements, taking for the easements. Will, I think, address that, and I think Will has pretty much spoken and said that 90 to 120 days is the minimum time frame following the law and all the legal requirements for that taking process. Not that between this board and the county, they couldn't add time to it, but, so, once that taking, or first phase of taking is complete, we can bid, phase 1B. All of the permits for all of the project have been obtained, so there is nothing keeping us from doing phase 1B except for the easements themselves. So, phase 1A has a construction period of 12 months. We don't think it'll take that long, but we think we have to give them that long to get a decent bid. So let's just say we gave notice of award July 1, 2023. We'd be done July 1, 2024. As a reminder, our funding deadline is sometime in May of 2025. That's when our loan converts. That's the end of the drawdown period. So phase 1B looks like it might follow up so that we could bid it late summer, early fall. And again, it's a little longer than a year process. So it's going to get closer to that May 2025 deadline, but it still looks like it's within the deadline.
Just clarify for me, because I've forgotten. 1A is the construction of the ribs up on Eagle.
Yes, everything on Air Force property, correct.
Okay.
Including the distribution, transmission.
That's what I thought, but I just wanted to.
Mostly earthwork.
Phil, the contract go out nationwide? Is it Florida contractor only, or are we bound by anything like that?
It will be advertised in a paper that gets picked up nationwide.
No.
There will also be, we will force advertise it on some of the national bulletins. So yes, it will
No
get picked up
requirement.
national.
Okay.
You're not, like, for the earthwork part of it, I could be proven wrong, but you're gonna have someone within 100 miles, 150 miles of this location right here do that work. Phase 1A, in my, this is Phil's opinion, is probably an easier phase to get a contractor and get a good price on. It's dirt work, and not only are there more people that can do that work, a broad variety of different contractors, including utility contractors, can do that work, in addition to earthwork folks. But as we all know, dirt is in high demand.
It is now.
So, you would expect some of the cost of the dirt removal would be offset by their sale, and contractors, while they'd like to not give that back to you, they will think competitively, and they will have, they will as part of the bidding process. Phase 1B is a much different story. That is a bigger project price-wise and might attract a larger audience from folks further away. In fact, I know of two contractors, one in North Alabama and one in Georgia, that would most definitely be interested in that project. So it'll attract a little more attention and be more expensive.
We should auction off that dirt. That's good dirt up there.
So, I have
It's
a couple of questions.
sand,
So,
garbage, dirt.
you mentioned we're about 200,000 gallons a
24
day
inches of
shy of
good
our
crap.
max capacity. So give to me in ballpark what that means time-wise. How many of these Brett Ramsey developments is that 200,000 gallons a day? Are we gonna get close to it? Are we gonna be finished with Eglin before?
Let me,
Roughly, you
no,
did
no,
a couple.
Let me give you some real numbers, because Corey's got them in here. And this is really interesting. In 2013, the average amount of wastewater processed at Chris's wastewater treatment plant was 1.9 million gallons per day. Last year, it was 1.696 million gallons.
That's crazy.
The amount of wastewater we process has actually gone down because I was a huge problem. But now let's really cut to the chase. So the wastewater treated dropped from 1.9 to 1.812 in 2014 to 1.466 in 2015. Now everyone would agree there's been a substantial amount of growth since 2014. But even with I&I, we've only gone from 1.466 to 1.466 1.696 last year. So
So the building is
7
more
years.
septic and not on our lines?
No, sir.
No.
No, most all new developments are on sewer.
Okay.
One thing Holly Navar has seen is with some of the requirements that were instigated with the start of Fairpoint, our per capita consumption of water and thus the contribution back for sewer has shrunk a substantial amount. I think the last time we did the calculation, we were at about 167 gallons per average residential. And our Fairpoint permit requires us to be at 110 gallons per capita. And there's about 2.7-ish people per residence right now. So we are well below that requirement.
Thank you.
So a pretty good substantial amount of growth to answer your question. I don't think there's anyone sitting here that's too worried about growth.
I just remember you doing the charts that said this.
Oh, yeah.
Yeah, that's all. Okay, thanks for that.
Maybe we'll get Corey
I'm
to
done with that.
give that back to us next month.
Any questions from the board for Phil? I do, well, let's go ahead. Is your question regarding engineering?
Yep.
Okay.
Yep. When Eglin comes online, what do you think the impact's gonna be to, the Holly by the Sea Rec Center spray area?
The Holly by the Sea Rec Center spray area, we don't really control the use of. Those folks within that building and on that property get to decide on a daily basis how much water they take out of that pond across the street. So Eglin won't affect it at all. We have an agreement to supply water to them.
Right.
So we will continue to supply water to
Right.
them.
Okay.
In other words, it won't reduce their ability to irrigate across the street. Or, and it won't affect, because this is even a bigger issue, it has been for years. It won't affect our ability to try and keep that pond full so that everybody's
That's
happy.
what I was gonna say, because that's basically what the 2001 agreement says.
No,
Keep the
Holly
pond full.
Navar will continue to honor those two agreements, and there is no requirement to send an ounce of water to the Eglin property. It will only go there when the other commitments, that golf course is not gonna quit needing irrigation.
I wasn't even gonna ask about the golf course. Thank you.
Phil, I do have one question. That last month we had, and this is for the benefit of the rest of the board, because I know we've already talked about it, but we asked for a updated spray field cost for
Yes.
the golf course. Can you update everyone on where we are with that? Because I think we were going to try to
Well,
have it by this meeting.
To be technically correct, that wasn't a direction to me as much as it was to your CEO.
Right.
He does have me working on parts of that as well as Clinton, so we have a number. We have probably 5 or 6 questions related to that number, some of which we wanted to make sure we caught the income statement and the balance sheet changes from this. So I would expect in the next week to 10 days that we'll have a final number on that. So really close.
Right.
Agenda,
What's that? Yeah.
agenda.
Put it on the May agenda then?
Oh, yes,
Discuss it publicly.
absolutely,
Okay.
Mr.
absolutely.
President, before you, I wanted to make another comment since we were talking about the Eglin facility. I want two points. And this came, Phil and I, in going through it, I just want to reemphasize that, again, the lease that was signed by the Air Force, the parties to that lease are the county and the government. Okay, so in there, one of the issues and concerns was access. And so Mr. Danheiser and I talked about this, and on our recommendation, I do expect that the board, the county commissioners, will have a board action which will appoint you, the Holly Navar Water System, as their lead agent on this project to execute those matters that the lease allows for. What we think that, what we know that does is that then makes us allows us to then get our contractors on board, be out there, operate and whatnot, because it's federal. I mean, it's a federal military base. So I just wanted to point that out. So if you see that, somebody asks or talks about it, remember this lease is between the county and the government, and we're functioning as part of essentially their agent. That is then leads to the second point,
Well,
is the reminder.
To your first point, when do you expect that the county will make that designation?
Right, and as I indicated, when my discussions with Mr. Dan Hise this afternoon, he says that will be on the agenda next week.
Okay,
That's what my understanding is.
And I did get a separate communication from Mike Schmidt that along those same lines too. to
Okay,
make-
good.
We're just trying to make sure we got everything.
We just want to make sure, and I want to keep y'all updated. And because you are essentially the agent of that, that's the other reason that this is a sunshine issue. That is, this is an issue that is subject to the sunshine. We're in a publicly noticed meeting, and you're able to discuss it. Do not discuss it amongst yourself outside of a properly noticed meeting. That includes text and emails. So if you get communication from the CEO about the Eglin project, do not hit reply all and start commenting on it. Reply back and ask your questions of the CEO. That's why, and then he can go and reply back. It's just so important because it is, those records will be public records, and we want to be in full compliance and on this project.
We were so excited the lease was signed, we couldn't help it.
I understand, and I'm very excited about it too. I was just very distressed about it.
I could tell from the text.
Thank you, Mr. Dunaway. Mr. Cosby, would you sign the sheet before you leave, just since you were able to speak?
Yes, sir.
And any other business come before the board? If not, I'll accept a motion to adjourn.
So moved. Second.
All in favor, say aye. Aye. Meeting adjourned.
So quickly, we finished.